Good morning. Good morning, YouTubers and stock Twitters. This Bag It On, Stock Market Caddy. Got to sneeze here. Excuse me. Hold on. Sorry about that. It is 11:40, 43, and we had a little tropical storm, little hurricane one come blowing through here last night. Kept things interesting. Gonna have to rake up some more leaves this weekend. Lovely. But little hurricane blowing through the markets. Did you see it coming? I hope so. I hope so. We're going to give folks a chance to patch in if they'd like, and we'll explain what Swing Machine is doing, what we're doing. We have been tweeting out and we have been telling our members for almost 2 weeks that we were expecting a significant rally today and that it would be a bear trap. And it is not a narrative. Wasn't a hunch. It wasn't a guess. It was technical. Now we could have gone the other way, most certainly. There's nothing definite, but I will explain at the top of the hour why we were saying what we were saying. For the next one, it was rather unique. We haven't seen that setup, that specific setup, in a long time. We went in yesterday. We went in a whole bunch of ways, but we bought 3,900 calls, a bunch of them, yesterday on the S&P for December. They're up over 300% today, to name a few. So we're going to explain how that call was made, and stay with us. If you've got any questions, this is going to be your opportunity to ask. Good morning, Tina. And you can use the chat function. You want us to plug in any of your past stocks, you know, anything you want. And we'll be back in about 15 minutes, but we'll give you a chance. While you're there, take a look. 805, 805. I'm assuming the number come out at 8. I don't have a TV, so I don't even know. But I'm assuming it came out at 8. But at 805, the VIX turns down. 810, 8 grand. 805, 11 grand. 810, 4 grand. 815, 4,800. 745, 4 grand. 1020, almost a grand. These are minis. Want to use micros? 1/10 the size. Want to push around 5 and 10 of them? You can do the math from there. Swing Machine does not use moving averages. Doesn't. Would not work. Doesn't work. But there's a lot here than just this is the primary signal. But there's a lot here, and we will be happy to answer those questions. But we wanted to give you a glimpse. And Tina knows, Tina's been following us, but we've been saying for 2 weeks, bear trap, bear trap. We'll explain in a moment. bag advance that inspired my wife and I to start Stock Market Caddy some 10 years after we had very successfully invested tens of thousands of dollars, tens of thousands of hours into our own quest for robotic trading. We thought to ourselves that maybe there were traders 10 years into their career that just needed a little help around the edges, getting out of the woods occasionally. Maybe there were traders 5 years in that were lost in the woods. And maybe there were folks who had yet to pick up a club, done any trading at all, and wanted to learn what the game was all about. Feel free to enjoy the clip, but if you'd like to advance to the nexus of what StockMarketCaddy.com offers, simply advance to the 6-minute mark. Enjoy.
You gonna be wanting a different club there, Junior?
I can't do this.
Hey, you might should just loose your grip up a smidge. You know, a man's grip on his club just like a
That's
man's
not what I'm
grip on...
talking about.
I know.
No, you don't.
What I'm talking about is a game. Game that can't be won. Only played.
You don't understand.
I don't need to understand. Man, a soul on this entire earth ain't got a burden to carry. He don't understand. You ain't alone in that. But you've been carrying this one long enough. Time to go on. Lay it down.
I don't know how.
You got a choice. You can stop, or you can start.
Start.
Walking.
Where?
Right back to where you always been, and then stand there. Still. Real still. And remember.
It's too long ago.
Oh no, sir, it was just a moment ago. Time for you to come on out the shadows, Junior. Time for you to choose.
I can't.
Yes, you can. But you ain't alone. I'm right here with you. I've been here all along. Now play the game. Your game. The one that only you was meant to play. The one that was given to you when you come into this world. You ready? Come on, take your stance. Strike that ball, Junior. Don't hold nothing back. Give it everything. Now's the time. Just let yourself remember. Remember your swing. That's right, Junior. Settle yourself. Let's go. Now is the time, Junior.
Hey, Bagger,
Yep.
you are one hell of a caddy.
To those members who have joined Stock Market Caddy and have committed to an outcome, not just committing to try something, Susan and I commit to helping them reach their fullest trading potential. Good afternoon, everybody. Bag it on, Stock Market Caddy. How are you all? What a day, huh? What a day. What a couple of weeks it's been. Awesome. And we hope you're doing well today. Tina, thanks. We're fine. I hope everyone else is fine in Central Florida. We did have a little one, kind of a tropical storm, come blowing through. Today is November 10th at about 12:07. And we hope you're doing well. CPI number is out, and the markets are doing what the markets are doing. And I do want to share with those that come in. I certainly want to give you an orientation on what Swing Machine is doing this very moment, how it's played it, answer any questions you might have. But also over the last 2 weeks, we have been cautioning folks that that we felt there was a bear trap setting up, and that the trigger mechanism, the bear trap, was the CPI number. And we're going to show you exactly why. And it was a kind of a rare circumstance, but it is a circumstance that can develop. It usually happens on the bearish side, but this one set up for the bullish. And but let's just take a look together. I'm going to mark this up a little bit, if you don't mind, and let's do that together. First thing is this is Swing Machine Plus. And by the way, I'm Bag It On, if you don't know. I'm not a broker, I'm not a broker, I'm not a financial advisor. We don't make specific recommendations to buy or sell anything. You know, we don't try to make it a game to come into a binary event and take a guess at something. We know everyone is working very hard. We we only tweet out various things to create awareness about who we are, because what we're doing different than truly anybody else, and we do follow the Twitter sphere. We're out to mentor and instruct folks how to trade mechanically and robotically. There's a big difference, and we spend all of the tools that, in particular, Swing Machine Plus. Now we have over 70 proprietary radars, strategies, full-blown strategies, indicators, show me studies. They're all available to our annual members. They're leased to them. They're encrypted. They have everything on their desktop, but they're not for sale. And we don't sell them individually, lease them individually. And a person needs to go through, regardless of how much trading experience you have. We have had people that have a lot more trading experience than me. But we do require they go through what we call a Q school, at least initially. We want to make sure that you understand how and why we approach the markets the way we do, how these tools work, and basically giving you and us an opportunity to say, this isn't for me, Don. You're a nice guy. I've learned a lot, but this isn't for me. And we haven't had this happen, but if we did, if we see something or hear something, during the course of the 3 weeks, and we say, hey, you're just not suited for this game. It is a game to us. It cannot, like golf, it cannot be won. It can only be played. And before this market moves out of sync here, let's just come here and show here, and then we'll talk about it. And so the VIX itself on a 5-minute interval, and Swing Machine can play any interval of your choosing. But right here, at this trigger right here was at 8:05. 8:05, the VIX goes short. That was an indication to our members that the market was in all likelihood going to rally. And now I don't know. I don't have a TV in my office. I don't keep one, don't need one. That may have very well been where the CPI number came out, and we all knew it was coming out. But, the Swing Machine will do this day in and day out, and it'll do it later today or tomorrow, regardless of what's going on. There is a technique to using this, but let's just show you the signals that came in when they did. And so you don't really have to make any, if you wanted to play. Now we picked up call options, and, we had a very, very big morning. We were set up for this, but if you didn't and you wanted to come in and just play Swing Machine, you certainly could have done that, because at 8:10, the ES goes long at 37.65. Now we never, by the way, although we use the VIX a lot, we never short the VIX with actual positions. We just never do that. We will buy the VIX, but we won't short it. But we will use it as an indicator for sure. It's not the only one though. The ES, if you had taken that trade, which we most certainly have members that did, one mini contract, you're up $8,000. A micro, you're up 800. 10 minis, you're up 80,000, right? It's all scalable. The NQ on a 5-minute right here. And let's highlight this. 8:05, 8:05, 11,008, almost $12,000. Same thing. Micro, 1,200. Mini, 12, right here, and 10 of them, over 100,000. The YM, long, 810, 810, $4,300. The Russell, 815 at 1770, long, 4,400. Gold, long, it's dipping right now, but long at 745 at 1711. Now, on a larger interval, gold and silver are breaking out to us, and we've been buying them, in particular silver. And we've tweeted this out. If you look at our tweet streams, we've been picking up silver, real value, not digital value, not token value, real value, underneath 17. We think gold and silver are going much, much higher next year. And and we'll save the conversation for Bitcoin and all that. Now, Swing Machine trades Bitcoin. We'll even plug it in, so you can see how it's done. CLZ oil is long this morning at 820. So let you do the math. Let's not count that. 8,000. Call that roughly 20,000, 24,000, 28,000, over $30,000 potentially. Now I say potentially because there is a technique. There is a technique for trading Swing Machine Plus. And let me just say this for those that are not familiar with this. This is not, we make it a game because we want it to be fun. The market. Swing Machine is not a game. It is not a gimmick. It isn't using moving averages. And by the way, we have been doing this not for 6 months, not for 6 years. Susan and I built Swing Machine and then many of the tools, but we first built this in 2002, 2003. So we've been here long before Twitter. And YouTube, I guess, was just around and we weren't even using. But Stock Market Caddy was not even on our radar, so to speak. We didn't. Stock Market Caddy didn't come out of the ground until 2011, 2012, which I'm happy to tell the story, but I won't bore you with it now. So who are we, right? I'm not a broker. I'm not a broker. Not a financial advisor. I spent from 1981 to the early 2000s, I was wearing a surgical mask before it was fashionable. Good God. I was teaching surgeons how to work with some of the most advanced instrumentation of the day, every day. So I started my days early and was in surgery. Didn't touch patients. I'm not a surgeon, but I worked with them all that time. And Susan, during the same time, we've been very fortunate in life. Susie and I have been together since we were in college. Susan worked for IBM and for Lotus Software. In the early 2000s, we had done well. We were always involved in the markets, right? I had brokers, had financial advisors, had all that shit. And we actually had IRA accounts in 1981 before we had furniture. Okay. Susan, I can remember we were in Miami and Susan's like, Don, what are you doing? You know, I'm opening an IRA account with $500. Don, we don't even have a den set. We had bean bags. Had a tiny little TV. And as I said, Susie, we're going to have a great life, but we are going to be independent. We're going to do what we want to do when we want to do it, you know, within reason. We're very responsible, but we're going to have a great life. And knock on wood, we have had a great life. But after so we saw a lot, right? We saw the crash of 87. There was a little crash in 94. There was the Thai baht crisis, if I'm not mixing up my dates, and there was in 97. There certainly was the crash of the .com. Yeah, you know, I had been through all the IBD stuff, which is fine, very expensive today, in my view. The IBD, the VectorVest, all that stuff, all very good. Brokers, all the stuff, you know, you got to get 10% on your money and all the traditional stuff. And what happened was after we had all gone through it, it was about 2002, 2003, the markets were, you know, coming back. And I sat down with Susan and I just said, Susie, you know, this really is a crock of shit. That's or I said, this is just this market stuff is just a total crock of shit. You know, how could, you know, all these companies, we just grew to distrust it. So what Susie wasn't really that involved in the markets per se, but we had a conversation and she said, well, what do we do? You know, what do we do? And I said, well, we got two choices. We can either go out, find one or two really good or better fiduciaries than what we had and turn it all over to them and, you know, go live our lives and hope for the best. Or we can take control of this and educate ourselves and control our own destiny. And she said, okay. then let's, we're going to do the latter. That's just what we did, right? Because we moved from, when we were babes in the woods out of college, this in the early 80s, things, and interest rates of 17, 18%, things, you think things are bleak now. I mean, they were very, very bleak. So we moved we packed up everything we had in the back of a Chevette and moved to Miami and got started in Florida too, by the way, the promise of the Sun Belt. So we set out to do this. Now, out of the ground, I want you to know, there was a tremendous amount of trial and error. I'm embarrassed to tell you, so I can't, and a tremendous amount of time, tremendous amount of money, and money's lost. I made all kinds of mistakes. We both did. And painful mistakes, and a tremendous amount of time trying to get to a place where we wanted to be able to see the markets and have something that we could trust. I didn't even want to rely on my opinion, my own opinion, or anyone's opinion, right? But even my own. The dream was to be agnostic. And we started with a presumption that if that what is known, what can be known, is known by the market, and that I, Susan, know nothing. Very humbling. And I will, to this day, arm wrestle you and all the other Twitter spheres for the right to say that, we're not dumb people, but I want to be the most ignorant. I want to be. I don't ever want to be in a position where I say, I know exactly what the market is going to do. So I want to be able to track the money flow. The reason being is that people collectively, they will move their money first. That's the first thing they do. Even in you ever see these plane crashes where a plane goes down, and it's not a complete wipeout, and the people, they get up out of their seats and they grab their suitcases. You would think they would just like get their ass off the plane. No, they want their belongings. They want their stuff. And so they will move their stuff first before they will do anything. And I said to Susan, if we can track that flow of money, then we'll just go with the flow one way or the other. The other thing is that, and our membership has grown, by the way, too, and we always learn from everybody, because you come in with different experiences. Now, my life experiences had been with surgeons, and it was rather unique, right? I never anticipated to be doing that too, by the way. I won't bother because it's too, it doesn't interest you, but I never even had a biology class. I mean, go figure that out, right? But when I would go into surgery with, and many times it was the same surgeons, they did exactly the same thing, almost to a point where they were almost like a superstition. They did exactly the same thing every day. It was boring. It was boring to them. But they loved it, right? I mean, they loved what they were doing, but they did exactly the same thing, and their staff did exactly the same thing, from patient to patient to patient. Now, it might twist a little bit different, but they didn't make radical changes. My job many times was to try to affect or to change their surgical technique just a little bit, maybe just a little bit, to help improve their patient outcome, to improve their practice, improve whatever. And that could take months, sometimes years, right? Because they were they didn't change. They just didn't. And so I said to Susan, I said, it would be wonderful if we could develop an approach, a surgical approach to our trading, to our investing. I would like to have that kind of discipline, but we can't have that discipline if we're going to listen to, I used to call it faux, FAUX, before Trump was calling it fake media. I called it faux media. for CNBC, and what I nicknamed, the Contrarian News Bubble Channel. I hated those people. I haven't listened to them in 15 years, 20 years. I hated them back then. Mark Haynes was okay, but I had the TV in the office and everything. Finally, I said, I got to throw this thing in the pool. These people are dumber than dumb. It's just awful. And so I guess the biggest thing I can say to you is that as a trader, if you have that box in your office, get rid of it. Get rid of it. It's doing you no good. And if you may say that you're not seeing it, you're not hearing it, it gets into your subconscious. Just get rid of it. It's basically the home shopping network for stocks. You just bring people in and you hear something, just get rid of it. You've got to clear, you've got to get clear, of mind and soul. And so, when we started doing what we're doing, and we went through all these trials and errors of platforms too, by the way, we didn't start with TradeStation. We started with some others, some that are not even around. But we went to TradeStation, and thank goodness, because we could not do, and we could not have done what we've done if we didn't have TradeStation. And I have no affiliation with them, just an extremely happy customer, right? What drew us there was the computer language that we could build. We could build and grow. And I said, that's really where we need to go. Some of these other places, yes, they have these things called scripts and they can plug them in and play and everything. But from TradeStation, you can really build it, from scratch. And now you don't have to do that, right? We set out to do that. We did not set out. Stock Market Caddy, the business aspect of what has grown, it was not what we were out to do at all. It wasn't even a thought, to be honest with you. It just wasn't. We were just out to manage our own bread. And so we went from there, and we were pushing stocks around, and then options around, and then ultimately then futures. We couldn't have done what we did, though, in the 1990s, or even before 2000, because the technology wasn't there. The internet speeds weren't there, but they were coming available. And so that is what also motivated us. And then ultimately, it kind of all gelled, and we got to a beautiful place, and Susan has her set up, and it turned out I took a sabbatical from doing the surgery stuff and working for others, and ended up, I was only supposed to be gone for 6 months. I was in a great place, and I could take a 6-month sabbatical, and I ended up not going back. Kind of miss it, but it is what it is. And Susan, she had left IBM and Lotus and was teaching aerobics and spinning and yoga and doing all that. I got to say that, previous to that, she had no interest or passion about the markets at all, but wanted to do it. So she did. And she still does. But Susan, I'd like for her to make some of these videos because she got great insight, but she's not inclined. But she's here. She's certainly available to talk to anybody ever want to talk to Susan. Can be arranged. But she's in cash every night. She is risk averse. So many of the tools were built for Susan and around Susan because she was so risk averse, right? And had to, she was very, very particular. But she still teaches aerobics and spinning and yoga and does all of that. She's got we both got a wonderful life, but she's in cash every night. If she has any, I will put these positions on and she will watch them. If I put options on, I put the options on and she takes them off. So it's kind of the deal. She's got a discipline, and I'm happy to answer those questions about how we manage those. So central to what we're doing is swing machine. So I'll just take a minute and explain what's happening here. You can do this with a stock. You can do it with Bitcoin. You can do it with anything. and you can choose the interval that you want. So let's just, we routinely, and then in the first few days of the Q school, we go into great detail here and we get everybody's eyes or the person's. We only do 1 or 2 people, no more than 2 people at once during Q school, 3 weeks plus. And we will, we want you to look first at the VIX on the 5-minute. If the 5-minute VIX is trending down, this is the signal, and it isn't a short. It's ripping against the short, but it is short. Generally, not always, and it can be programmed, but generally, if the VIX is trending down, it isn't the number on the VIX that's important. It's the trend of the VIX. The number will tell us how much the market can move, at the drop of a hat. At 25, the market can move 1 to 2% at the drop of a hat. When it gets to 30, it can move 2 to 3% at the drop of a hat. The VIX normally is between 18 and 22. When it gets below 18, 15 to 8, under 18, then the market is, just grinding one way or the other, usually up at that point. And is, the range is probably about 0.5%. But it's the trend. It's the trend of the VIX that's important. And again, all of this can be programmed, right? All these trades can go in by machine, and we can trade. We can, match up multiple time frames. We can match up the VIX. If the VIX is doing this, we want to do that and do all that sort of thing. So I'm happy to answer any questions. But the first step is to look at what the VIX is doing. So our members would have been looking, well, right at 805. That VIX was tripping off. And then here on the 5-minute, it went long. It's in a dip, but it's long, and that lettering is green. By the way, hopefully you're watching this in high definition. Our members get to see this. They have it on their desktop, but they also see it on Zoom, high def. And by the way, we're using Zoom before Zoom was Zoom. 54 5-minute segments ago is what that means. 54 5-minute. It's just, this is a quick check on time. So we don't have to actually look at the time and then look at the time. We know it's 54 5-minute segments ago. And it tripped off and it went long. The entry price, the time, the date, just today. And then this gives us our trend information. And we equated this to golf because we wanted it to be fun. I did give thought to equating it to surgery because that's what I knew. And Susan thought that would be gross. Yeah, Don, you love surgery. Susan's mom was a nurse and she didn't really like needles. She goes, most people are not going to like, you talking about surgery. So I'm like, okay, so we'll equate it. We'll equate, the markets to something fun, golf, right? I don't want to equate it to war. That's a bad thing. It is a battle, but golf is really, it really is comparable to golf in so many ways. And we have some very, very fine golfers as members, and they laugh at me because, I love the game of golf, but, and my game, is a journeyman's game. But this is telling us the trend information, which is right now, it's absolutely mixed, right? On a 5-minute interval, it's pausing a little bit. That's all it's doing. This gives us the number of trades. And we can set this to start counting at a particular time, which is 4 a.m. So so we've had 2 long trades and 2 short trades. And then this gives us our fear gauge on the interval on which we're trading. And I'll come back to this. This is a very, very important aspect of Swing Machine Plus, particularly if you are a swing trader or an option trader. This is a huge moneymaker for me, us, our members, and shouldn't be overlooked. Everyone focuses, here and on the money, but this is a big one. So, and you can see. Now, you might say, well, I don't understand, Don. What's going on here? I see a short. I get short. Please don't, right? You're on delay. I'm just taking a moment to explain what's happening here. The 5-minute is long. The 1-minute interval went short at, just as we were talking here, in the last 13 minutes. 13 minutes. It went short at 39.25, at 12.22. That was, 13 minutes ago. And if a person took that trade, if a member took that trade with a mini contract, they're up $587, $600, or with a micro, or $6,000 if they did 10. What has to be practiced and what has to be understood, and it takes a little bit more time, not much, but a little bit more time than I can fully explain here, is we teach new folks to trade in the direction of the 5. When the 1 minute goes short against a long 5 minute, we characterize that 1 minute as what type of trade? A counter trade, not a trend trade. There are only 4 ways to trade: trend follow long, trend follow short, counter trade short, counter trade long. That's it. And Swing Machine is tracking that. But you need to have that explained in writing to you on a screen. We explain it, and then we explain also the logic and the flow of the software that's running that. But this is technically a counter trade. Now, do we have members that are, we have members that are excellent counter traders. But in the beginning, we teach everybody, even at a micro level here, which is 1 in 5, we can even get smaller, to go with the trend, It's just easier. So there are some truths out there that come from Wall Street, not many, but there are a few, and that's one of them. But that's what's taking place. So this little 1 minute dip that's taking place, this little 1 minute short, is just a counter trend to the 5. My guess is, but I don't guess, right? I just trade, the tools that we have, that this 5 minute is probably going to last all day. That's my guess. And so what we would suggest to our new members is that although they could have made money on that, they waive that off, wait for the 1 minute to cycle, get long, and go again, and go in the direction of the 5. And they have to wait. That's kind of the rotation. And you notice how all the markets are doing the same thing all at the same time too, by the way. This idea, this concept that this is a market of stocks, in our view, is just crap. You can trade individual stocks and do really well and invest and all that. You can, no doubt about it. But the markets themselves have been what we call commoditized, maybe mainly through options and through the futures markets. And what do we mean? The futures markets are where they trade, commodities: corn, copper, gold, lumber, orange juice. The futures, the indices were not always in the futures markets, but they are today. And that's what's commoditized them. We see this movement of all 4 markets: the S&P, the NASDAQ, the Dow, the Russell, different indices, different stocks, and they all move within not always, but usually within 5 or 10 minutes of each other. And on an hourly basis, they do exactly the same. In fact, if we want to have some fun, I'm going to, now I haven't seen this, right? I haven't seen this, but, what I'm going to do is I want to just to dramatize a point here. I'm fairly certain that this will be the case. Watch this. I'm going to change the ES contract to a 60-minute. Now, you couldn't do this sort of thing if Swing Machine was using moving averages. It just would be all messed up, right? And we, in the 20 years ago, we explored all that. We understood, we got the books on candles and all that crap, right? It's crap. But let's change this to a 60-minute. Okay, so on the 60-minute ES, it went long 5 hours ago. Kind of interesting. At 9. Okay, so I would have thought it would have been sooner, but okay. And now I want to see, let's just test this out here a little bit. Look at the NASDAQ 5 hours ago at 9 o'clock. Interesting. How about the Dow? 5 hours ago. And how about the Russell? 4 hours ago. How about the VIX? 4 hours ago, it goes short. So what the F is that all about, right? That's commodity, that's markets that are commoditized. These people, these hedge funds are moving billions and billions of dollars around. They're not, they're not as fast and as quick as you think they are. That's an hour after the news, right? The retail trader is trying to get in there and trying to trade super fast, super frequent, and just, probably over trading. It isn't as fast as you think. And on an hourly basis, now we don't trade an hourly interval intraday. Okay, we do trade hourly signals, but not intraday. The reason being is we don't always get an hourly signal in a given day, right? We've seen hourly signals last 2 weeks. It's possible, and I wouldn't be surprised, that 2 weeks from now, we do a live session and I'll say, look at the 60-minute. It went long at 9 a.m. back on November 10th, and it could be Thanksgiving. And we could be up $20,000 on that. It's entirely possible. We've seen it. Not likely that it'll be that, because we still have,
Order filled.
pretty good volatility. And we have some little trades that are being traded by Robotic. That is trading five
Order filled.
MES, and notice, and then we have the ES contract itself. So that's what's going on up there. Those trades are going in by machine. So I'm going to put this back. If you have any questions, by the way, on this, it really it's fascinating to us. So if somehow you think that the markets are moving, I'm kind of dating myself, but I remember like in the 90s, we'd be driving around in our cars and, we were all the yuppies and the dinks, that was before the Gen Ys and all these other names. The dinks were the dual income, no kid crowd. And then the yuppies, as an old term. And we had these things that were bag phones. They were in a bag. You had to carry the bag in and out of the car. We're on these big bag phones. We're calling our brokers and, checking telebroker at Schwab. It's something, boy, that was sophisticated. Telebroker, America Online, and he'd give you a quote on something, America Online, and he'd get you a quote in the car. And so if you think that the markets are moving because everybody's on their cell phones and they're all buying and selling and selling and buying individually, it's just not the case at all. It isn't. That stopped 20 years ago. The investing public, for the most part, is passive. They as demonstrated even in the crypto. It's really unfortunate too, by the way, what's gone on with the crypto, but they're passive. They have moved their, this is the bulk of them. I'm not saying that it's you, but they have moved the bulk of all their money into passive funds. And for the most part, they've gone long, and then, and they just want to, they just want to score the big hit, and, and they just kind of made some of the same, some of the same mistakes over again. So they're along for the ride. They're going to go where the big money is going to go. And when the big money pulls the plug, on whatever the markets are, then their accounts are going to go down. And as they've seen in the crypto crowd, they've just pulled the plug. So, we just trade, basically the here and the now, and we do use now intraday, now these futures, by the way, if you're not familiar with futures, they're beautiful, beautiful products. You shouldn't be afraid of them. They're highly liquid. What do I mean by that? The difference between the bid and the ask is very, very small. Like we're talking like a tick or two, very, very small. You can get in and get out very, very quickly. There's no time decay, right? So if you're trading options, they're not very liquid. So we're not going to trade something that isn't very liquid. We're not going to trade that intraday. No. Do we trade options? Yes. We define our risk, but we're going out days or weeks or months with options because they're not very liquid. The other thing is with options, you have to be concerned with time decay, right? And we have tools for trading options. We're in the process of building a new radar that will not only tell you the expected move, but also tell you what would be the best type of option for the conditions of whatever it is you're looking at, right? Is it better to buy the call, or is it better to sell the put and buy a put, do a credit put spread, and it'll actually tell you. It'll tell you, and there's specific reasons for doing either or. Options is like, we draw the comparison to options is like playing chess versus checkers. Chess is a great game, but you just need to, you don't have to be a super advanced chess player. You don't have to be super complicated, but you do need to understand how the pieces move. So you don't want to go in, and sit down and play a game of chess and just move the pieces like checkers, it won't last very long. So you need to learn the moves, but back to futures, you don't have that complexity. So we will trade futures intraday, and we will use some pretty good leverage to get the job done. Now, if we're going to go overnight, we will use futures, but we will begin to do what? Reduce our leverage, right? So we might even use micros. We might even use like 5 micros. So we'll begin, as we go further out in time, we begin to reduce leverage. And then if we're going to go even further out, then we're going to even try to define our risk and do some hedging, right? So just discussing and talking about the trading game. What I see people will sometimes do is they get an account opened up, and they see the bunch of money and being made, and they just come in and they just pile in, and we're not focused. Our style of trading, we're not focused on an individual trade, right? As a retail trader, you're focused, not you guys, not likely, but you get focused on, those individual specific trades up there. Is he making any money up there? Well, man, he's down $2. You're focused on that individual trade, or you put a trade on and you're hyper focused on that individual trade. We're not. And that has to be learned. That has to be taught. We're focused on the volatility of our account for a trading session. That trading session could be 1 hour, it could be 4 hours, could be a day, could be stretched over several days, depending upon what we're doing. And we want the volatility in our account to be comfortable. And now option traders do this all the time. They do things to hedge that volatility. We do that too. And we can also do that with futures, right? See, so the difference is too, like, we'll get back to the game of golf. Anybody can drive up to a driving range, or the chip and putt or Top Golf, right? They go to Top Golf. They pull in, they open up their trunk, they got their big, $2,000 golf clubs. They go up there and, they get in a cocktail and they stand in the bay and, they're ripping the the balls out there. And I've never even been to Top Golf, but I see it. And they're ripping the golf balls and they're high-fiving and the girls are hitting them and everybody's just having a good old time, right? But at 4:00 this morning, or early this morning, there was some other young guy or young girl, and they put their clubs in the trunk of their car and they drove an hour to a golf course, and they got out and there was nobody around. They went up, they paid their money, they went to the practice range. There's nobody out there, very few. They hit golf balls, they loosened up, they limbered up, and it's 12 o'clock. They're probably just coming off the golf course now. And they just went out there and actually played a good game, competitive round of golf. There was probably nobody around them. They may not have even been playing with anybody. It can be a lonely game. And they have game, though. The person at Top Golf has no game. It's just, it's a show. It's whatever. Trading in the way that we trade is is a bit of a lonely endeavor. It's quiet. I don't have to travel anywhere. I don't have any paperwork to speak of. I'm not in surgery. I'm not with the nurses. I'm not going from hospital to hospital. I'm not doing any of that anymore, which is fine. I don't have to get on airplanes, just Susie and me. And it was from that we led to, stock market caddy, because they said, I wonder, Susie, when we watched this movie Bag of Ants, I stopped and paused that. And I said, I wonder if there are people out there like us, that making all the mistakes that we made. Maybe they are. What a waste, what a shame that would be, right? What a shame. And we would see, and that's where, even over the past few years, and, as ridiculed, and you saw it, we've seen maybe a whole generation of people just come in and blow away. The apes who went out and bought AMC stock, the crypto crowd. There's nothing wrong with crypto, by the way. I'm not passing judgment. It's just that why didn't anybody hedge it? For the love of Pete, it's just sinful if you didn't. And we have members, by the way, who have traded crypto and have done extremely, extremely well, but they didn't take a bath. So I kind of digressed a little bit here. I just kind of wanted to come out and I said, well, how did we make the call that we made, right? So let me show a couple of things. First thing, I just mentioned crypto. Let me just squeeze in here the crypto symbol for Bitcoin at BTC. Okay, now this uses quite a bit of leverage. It's a 5-pack, right? But let me change this symbol to a daily. Okay. All right. So it has cycled through. It went short 3 days ago, so it's not as dramatic. But I could even change it to a weekly, right? So the Bitcoin people in particular, and this is why I'm going to do that. They're hodlers, right? They want to hodl. They want to hold on for dear life. They want to stick it to the man. For the life of me, I wish they were around during the 90s and the .com, because you'd realize that buy and hold is not sticking it to Wall Street. I mean, you are literally like lambs to lions. I mean, for them to hear that is like, oh my God, these people are buying and hodling this crap. They're going to get killed. So let me change Bitcoin to a weekly, though. This is where it'll be dramatic. Okay. 43 weeks ago, at 38,205, Swing Machine said to get short Bitcoin. Now, you can look at this a couple of different ways. You could say, boy, if I had had a futures contract on there, I'd be up $107,000. Yeah, but a futures contract on this BTC, and when the coin was at 38, was a lot of leverage. But the way I would look at it, and what we told our members, is if I was sitting on, what some of these people were supposedly sitting on, these coins. Remember, the coin went as high as 80, right? But if I was sitting on a stack, they call it a stack of Bitcoins, and I wanted to hodl them, okay, fine, hodl them, keep them. But why not come into a futures account? Could be anybody. You hold and hodl your coins, but on a weekly basis, I'm getting a signal that I should be selling. So I don't want to sell them. I want to hodl them. So you go into the futures market, and what do? You short. It's what farmers do with corn and rice. Not rice, but maybe they do. Rough rice, they do. With their commodities all the time. So you could have shorted against your stack. So where would you be today? without, any adjustment. Yes, your stack of coins would have gone from 38,000, this is 5 of them, to 16,000. But your futures account would be up. So your account value, maybe you'd be down a little bit, but you wouldn't be down 80 or 90%. Now, I don't believe for a moment that Michael Saylor at MicroStrategy is not hedged, but he never talks about it. He never mentioned it, and the Natalie Brunels of the world and all those people. I mean, they've just been blown out. How about Raoul Paul? Isn't that guy? He's online too, I got 100% of my money in there, just liars. Just liars. I mean, they don't have, if they have 100% of their money still there, they're broke. Just reckless. But in any case, let's get back to the S&P. I'll put this back to oil, but this is how easy and objective swing machine and the tools that we have can be done. Put this back to a 5-minute, and get an objective, consistent view. So look at S&P. We have the S&P on a daily. It's actually flashing a long entry today at 3,900. So if we wanted to put it on a weekly, we could. It actually went short 29 weeks ago. Now it says only $230 because S&P is cash. It's not leveraged, it's not a futures contract, but it's delivered 231 points, right? So that's quite a bit of money. But on a daily basis, it is coming back up. Now, we were saying over the last 2 weeks that that the market was going to rally. We were setting up for a bear market rally. Promised everybody I would explain where that call came from, and it was probably going to be today. Why? Let's. I want to show you the VIX. Let's go back to the VIX on a 60-minute. I'm going to put it on a 60-minute. That's 4 hours. Going to push this back so we can even come back in. We can adjust this. Let's see if I can get a on the VIX. I'm going to set this at 240 minutes, which is a half a day. All right, and then we're going to put it. We'll go right in and put it on a daily. Okay, so going 11 days ago, the VIX starts trending down. And it actually started before that. We were up around 30, but it started trending down, but the market wasn't responding. The market was continuing to go down. And what was happening, I'd have to go back and look at the calendar, but remember the day that the Fed came out? Something really, really strange happened that day. Normally, right? And this is some of the things that you learn over, years of this. I can't remember the last time a market sold off on a Fed day, but it did the last time. Remember? I can't remember it ever doing that. The Federal Reserve is a group of academics, and they're the stooges, the academic stooges for the banks. The last time he met about 2 weeks ago, maybe it was 11 days ago. Let me look at the calendar.
Order
here,
filled.
so we know exactly. I think it was, it was back on. It wasn't even. It was back. I think it was just last week. It was on the 2nd. So the VIX was going down on the 27th, even in front of that. So the Fed comes out that day, and it was a hard day. And remember the question that was put to the Fed by one of the reporters? Now, all those questions are pre-approved, right? You don't get to ask the Federal Reserve shit. And the guy says, Mr. Chairman, the market is rallying. And, what do you think about the market? And I got my headphones on. I wasn't watching on TV. I did have my headphones on. I do listen to what the Fed is saying and, real time with the market. And I'm immediately thinking like, well, that's kind of odd because the market was selling down hard. And this guy just says, hey, the market's going up. And I'm thinking, okay, well, that was pre-approved, so that was like, maybe this thing is staged. And so then Powell starts talking brutally hawkish. I mean, he's like, oh man, we're fighting inflation. Remember? And the market starts puking and boom, boom, they're puking. And I mean, he is just hammering it. I'm like, wow, that's really strange because that's never happened. Not in the last 10 to 12 years. And the other thing is, so the market was puking, but the VIX wasn't going up. It kept coming down. Now I want to show you something really cool. I'm going to change the S&P to the skew. This is going to make you puke. Do you know what the skew is? Wait a second. Why did that go in? Let's see. Oh, it's $SKEW. I think it's .x. There it is. Skew. Now, skew is not a very good timing tool intraday or even from one day to the next, but it is in our view, it can give us some really, really big insights. What is skew? And it's the skew of the S&P. So let me kind of map this out. Now I'm a little bit over an hour, but you guys have been kind enough to listen. And if you have any questions, but I want to explain this to you, make it worth your time. When you have the S&P trading right here, as an example, in the middle, let's say the S&P is trading at $100. When you go to buy a call option at 110, it'll cost you, let's just say, a call option is a bullish bet. If you're trading at 100, you go to 110, 10 segments removed, $10 removed, it might cost you $5. You would think that if you're trading at 100 and you go down here and you get a bearish bet at 90, you would think that if it costs you $5 here, that the put would cost you $5. Normally the puts are always more money than the calls, because the market, and it has been traded this way since 1987, is more fearful than it is bearish or more bullish most of the time. And so to dramatize this, the put might be $6. So although the call option and the put option are equidistant from the S&P, there is usually a skew. The calls are usually cheaper than the puts, basically. Now, I don't want to get too wonkish on this, but I want to give you just the numbers. When the skew, let me clear this off. This is from our point of view, right? Others may disagree, but we've done this a few times. Okay, I just erased a backdrop there, but that's okay. Let's see if I can put it back. Yeah, there it is. All right, so the number to pay attention to is when skew is underneath 120, the market is very, very bullish. They're buying calls hand over fist, right? And I do think the options market is maybe more responsible for price movement than the futures market, because these people are making hundreds and billions of dollars. It's highly leveraged. This whole thing is all leveraged. So when the skew is at 120 or below, it's an indication to us that they're buying calls like crazy. 120 or below. Now, I have seen readings below 110, but rarely. When the skew is above 130, they're buying puts and the market is turning bearish. I have seen, the highest reading I have seen is 160, 161, right? I've seen it stay at 160. Now, it isn't enough to simply trade skew. You want to look at skew in relation to what where the S&P is and what it's doing. So back on the Fed day, when everybody was barfing and everyone was fearful, the VIX, as I just pointed out, was trending down. And even Susan said to me, and I remember said to me, well, that's odd as shit. Because if the market is really as fearful as everybody appears to be, then the VIX should be going up. And it wasn't. That's one part. Then we go in and we look at skew. And where was skew? It was south of 120. So as the market was going down, the skew was the VIX was going down. And as the market was going down, the skew was south of 120. In fact, the other day, it was at 111. The big money, they weren't the least bit concerned about a market crash. They weren't buying any puts. They were buying millions, hundreds of millions of dollars, billions of dollars of calls. Powell set this up. The retail crowd are watching TV. They're listening to his words. He is a liar. The banks are liars. They lie. They're not going to tell you the truth. I'm sorry. They're liars. So while he was scaring the bejesus out of everybody, what did he know? He could talk bearish. He could talk, really, I'm going to fight inflation and, no, the market pukes, because he knew the CPI number was out in 2 weeks and it was going to show what it showed today. Not only did he know, but his banker buddies knew, and Citadel knew, and all of them knew. And so it was a setup. And how did we know? The VIX was trending down. The skew was off the charts bullish when it should have been higher. It's a contrarian indicator, and I'll turn it around because we've used it. It's usually the other way. So that is what told us more than likely the last 2 weeks was a big bullshit setup. The central banks intervene in these markets all the time. They are out to what it is for them. They're not out to make money. They're not out to, run, make everybody rich or anything else. They are out to drive home the message that they are in control of the markets. And they mostly are. And they are the titular head of a banking cartel. And if you track and know how to track their money flow, you will do much better than listening to Kramer or any of that other bullshit. So that's what led us here. And it's here, now don't run out tomorrow and all the skews at this. But what can happen, and it may be March, and we have had some outstanding short calls. What's going to happen is this. Maybe weeks, maybe months from now, everybody's going to be bullish. Maybe I have no idea. And I don't really care about where an overall market goes, right? Because we're traders, right? It doesn't matter. But what will happen? Let's say that the market goes to 4,800, 4,900. It does something stupid. Let's say it goes to 5,000, right? What will happen up at the top? The skew, you would think, we're focusing on the skew. You would think the skew would go down, right? Because everyone's bullish. But what can happen, what does happen, the skew will go up. And that's how we knew. So we were sure when the market was at 42, 4,300 and 4,400, when everyone was bullish, where was the skew for us? It was at 160. 160. And I'm screaming and yelling, not screaming and yelling, but telling our members, they're selling the big money, the Warren Buffetts of the world, the Bezos, all those people. What are they doing? They're selling calls to the speculators and they're buying puts. They're doing just the opposite. And it was the skew that was letting us know. Now, it's not a great timing. It can go on for weeks and weeks and weeks, but we couple it, with a swing machine and we can really zero in, and then we can look to see maybe where the catalyst might be. And usually there's a little bit of a catalyst. So that's, in this instance, where we got the call. The call came from, we wanted to see, the call came from first the VIX trending down, and then the skew on Fed day was at 119, 118. And then next day, as the market is getting trashed, the VIX goes down again, and the skew gets over all these last days down at 111. If the big money, if they were fearful of a crash, then they would have been buying puts. And you have to know, they know. The Fed and them are cronies. They work together. So that's why we track the money flow. Those people are playing, they're in a club. They know, the high free, they know. So we just got to track them. So that's where it came from. If you got a question on it, let us know. Please don't overread it, though. Please don't try to overread it from one day to the next. It isn't a real good timing tool. Timing, but it can tell us the conditions. So where are we here now? You want to know? I mean, we said, and we went in, we played all kinds of things. We had, futures contracts long, we were gobbling up call contracts on Amazon and on Meta and on Apple. We went in yesterday. I went in yesterday and I bought 3,900 call options out past Thanksgiving. And you know what they cost? 89 cents. 89 cents. You know what they cost today? $3, $3.50. So we're diversified too, by the way. We're diversified not in what we invest in, we're diversified in what we do. So we do trade futures, we trade them intraday for cash flow. We trade options as we go further out. And yes, we will buy stock too and sell calls against it and so forth. I hope that makes sense. But I want to thank you. We've been a little over an hour, and I just wanted to come in and explain where that call came from. It didn't come from a punt, right? It isn't. I explained this to our members. I just explained it to you guys as a courtesy for coming by. But we were explaining, and we did it like 2 weeks ago. I'm like, this isn't right. This isn't like, what's he doing? And so he looks good. He looks strong. But the markets will probably near term have probably bottomed at this point. They're going to be volatile between now and the end of the year, because people have lost tremendous amounts of money on the individual stocks, and they're going to sell some of the biggest losses for tax losses. I think that the likelihood is that even in January, we're probably going to rally a little bit. This is this is a little bit long range stuff, and we have to look at this, on a daily basis, on a weekly basis. So this is the setup that's coming. It is not a forecast. I'm not doing time cycles here or anything of that sort, and that's kind of garbage too, right? If you're comparing markets compared to the 1929 or 5 years ago, 10 years ago, that's all bullshit from our point of view too. You got to track the price action, the here and the now. And we use to track that price action too. We use not just swing machine, we use point and figure, we use Renko, we use line break, we use, the price action itself, because in the end, that's all there is. Price, price, price.
Order filled.
So if you got any questions, I was kind of rambling on there, but it's been one for the ages. But I think, please pencil down March 5th. Pencil it down. Just write it, March 5th. My experience of watching markets since 1981. I don't know why this is, but a lot of times extremely big market moves come around the 5th of the month, around the 5th, not the 1st. This one's the 10th, but not every time, but a lot of times they come around the 5th. And the other one is a lot of times it's in March. The dot-com crash was in March 5th, 6th. The bottom in 2009, March 5th, March 6th. So this increase in interest rates in this attempt to curb inflation, it is real. There's no getting around it. Interest rates have gone up and all that, and there's been a market reaction. But next year, there's a lag effect. There's going to be a real impact. The market is ephemeral. It is what it is. And unless you can go in and capture this money, it's a waste of time for most people. But we go in and we capture this money. We hold that value, and then we deploy that money into something that's going to hold value. But next year, there's going to be an impact of what he's done. And we think, so it would be if on March 5th, the market is at 4,800 and the skew is at 160. What do you think I'm going to tell our members? Get short and get yourself plenty of time. Sometimes don't remember what I started with too. This is just a trading tip. The further out you go, reduce your leverage, reduce your size. Don't oversize. Probably one of the biggest mistakes traders make. Oversize, putting themselves under get a little more time. And with options, you probably want to be a seller of options than a buyer of option, but you want to get yourself more time, so you can manage it. It just is. I'm happy to answer any questions. Folks are coming in and looking. The Swing Machine is not what it does for us. It helps us get in. It helps us definitely get in and get out at the right place, but it also helps us stay out of the market. It also helps us to stay in. Now, remember, I just said, and I wasn't, I was just casually watching, but remember how we had a short trade here, the 1 minute, I think it was at 12.22, and it ran up as much as I think $600-700, maybe even more. And I said, what type of trade was that? It was a counter trade. And I said, we would teach our members to wave that off. And they do, right? And then I said, wait for the 1 minute to do what? To go long. And it just did. It went at 110, 9 minutes ago, just 9 minutes ago, and get long in the direction of the 5. And that trades up $300. And it's probably going to run even more. But so what our members are doing, what we teach is trying to go in that direction so that when Swing Machine is totally green, at minimum, they're not short. They're long. That's the idea. Or when it's totally red, they're not long, they're short. But there's a technique to it, and it calls for some practice. And of course, you can use charts. This is like looking at for me, like the dashboard of an airplane. Now, if I want to look out at the horizon, then I will look at a price chart, and that's okay to do. But could I trade just from here? And do we have members that trade just from here? Yes, absolutely we do. We do. And it's a beautiful thing. And the machine can now. So if you had, the machine could have put in, that trade, and you would be up that amount of money. But people react, to the, you got to learn not to react to the money. Any other questions? Said a lot here. Interesting day. Gold and silver are coming out of a pretty strong base and are probably going to continue to run. We said the other day what's going to happen if the CPI does come in as we expect. And I think the Fed knew 2 weeks ago what the hell the number was going to be. And he was, it's a victory lap. So the dollars come in, gold and silver, real value run. Interest rates come in, treasury bonds do what? They go up. The width between short-term treasuries and long-term treasuries widen. I haven't even looked. My guess is the banks, look at the XLF. I'm sure the banks are up today. He's not trying to protect you and me. He's not trying to, he's trying to protect his banks. So crazy, but that's what he's there to do. He works for them. George Carlin. It's a club and we're not in it. But that doesn't mean that we can't play their game. You have a huge advantage. We cannot, so don't get discouraged with the game. It is a game, and we try to explain what it is as we go, and you learn to play the game. We cannot control the game. So you don't get mad at the golf course. The game is the game. The golf course is the golf course. The conditions are the conditions. We can't do that. We can only control what we can control. And you got to stay within yourself. And you got to stay focused, right? So when I go out to play golf, I'm enjoying the day. But I like to play at my pace. I like to stay focused. I don't like a lot of chatter, but everyone's different. And I'm playing the course. I'm not necessarily playing the other guy, although I can, and I've worked for it. So what can you control in your trading? There's a lot of things you can control. Have you thought about it? Number one, if you are popping in and out of the market, one day you're watching, one day you're not. You don't want to go in your office, you don't want to look at it, and then you hear on CNBC the market's way up, and you patch in, to the market, or you hear some guy talking about this, talking about that, and you buy this, and you're haphazard. Why would you think you're going to get consistent results if your approach is inconsistent? You're not. So one of the things that you can control is your approach. You don't have to be an intraday trader. If you are an intraday trader, though, try to define the days that you're going to trade, define the times you're going to trade, and try to stay with that, whatever that is. And we have programs that are great for, 4 hours. We have programs that are great for an hour or less. And start early. Start your day early. Start your week early. What else can you control? You can control what you trade. Are you trading stocks one day, options another, futures another? You're trading the NASDAQ, and then you're trading the bonds, and then you're trading gold, and then you're trading oil, and then you're trading this, then you're trading that. Once again, if you're all over the map, what makes you think that your performance is going to be consistent, right? So you want to give thought to, what it is you're going to trade. Secondly, or thirdly, I'm doing the Biden thing. Secondly, count. Third thing, hope I didn't offend anybody. He's wonderful. He's a peach. The third thing is leverage. You don't have to use leverage, but when you do use leverage, are you using too much? Are you using it inconsistently? Are you trading, the Russell that uses the least amount of leverage and you're doing really well, really well, really well, and your account gets up and you get emotional. Oh boy, I'm going to go trade the NASDAQ now. And then you get, the NASDAQ has a no modal drawdown, but because it uses more leverage, you get nervous and you throw out, then you puke it all out. You want to use the same amount of leverage. So you need to know what that is. And you want to use the same. Do you, buy 100 shares of a $10 stock expecting to make X amount of money and then come in buy 100 shares of Apple or 100 shares of Amazon, use $30,000 worth of stock? I mean, that wouldn't be consistent. So you want to be consistent in the leverage you use. And you want to have hopefully a discipline. Now, strategies, I haven't talked about this, but strategies are important to us. They may appear to be holy grails, and many times they feel like holy grails, but they're a tool. They're a tool. And they're not automatic. Some days they feel automatic. Some weeks, then they go on, they can feel great. But they're a tool for us to measure our performance against. But they're a tool, in much the same way you go to Lowe's and get a saw, to build yourself a staircase, but the saw isn't going to build the staircase for you. And if that is your expectation, you're going to be disappointed in anything and everything that you might be looking at. Our tools are wonderful, but you need to have good carpentry skills. You need to have good pilot skills. You need to have good surgical skills to use these tools. And there's no jumping the shark. I put a tremendous amount of time into this. We're very well rewarded for it. It's a blast. It's not work for me because I love it, but you don't have to put in, that much. And we hope that we're going to hopefully save you some time over time, and that's the idea. But in the end, we can help caddy you a little bit, right? Get, as a mentor, but I can't hold the club. You got to hit the shots. So you got to decide when you're going to start in the morning, when you're going to start in the day, and how you're going to approach it, and how much time you're going to do. Now, I know many a person, which is fine, that say, you know what, Don, I can't play golf because I don't have the time. I get it. To learn how to play golf and to play golf is a huge time commitment. To learn how to trade and to play, and to do what we're doing is a huge time commitment. Now, if you want to be a swing trader, our tools can most definitely do that. I would use an hourly time frame. I would use options, and as we did in the last several days here, but I would not watch the price action intraday. If you're a swing trader, you don't need to. Just watch the closes. Maybe on the day that you think, I'm going to be ringing the cash register for better or for worse, I'm going to bang out. And then lastly, if you don't know how to keep score, then, and I'm not going to take the time here now to talk about it, but we teach everybody profit factor. And the reason we use profit factor, it keeps everybody honest. If you tell me your profit factor is 3 or 5 or 10, I know, where your trading is. You're in nirvana. If your trading, profit factor is less than 1, you're a losing machine. You're putting shingles on a roof. And if you don't know your profit factor, whether you're trading shares or options, then honestly, you don't know what you're doing. You are not in a position to help yourself. You have to track your profit factor day in, day out, so you know what to work on. A golfer who's serious about the game. I'm not talking about the guy who goes to Top Golf, right, and impresses the girls, and is having cocktails and driving the ball a country mile. And that's fine. You want to do that, that's fine. But the person who gets up at 4 or 5 in the morning, again, by themselves, and goes to the golf course and practices and gets out there and is practicing and playing a few competitive rounds so he can go out and play well on the weekend, is at a different stage. But he keeps track of how many greens does he hit in regulation, how many fairways does he hit, how many sand saves does he hit, not just his handicap, but he's got handicaps within handicaps. Why does he do that? So he knows what to work on. I'm not putting well. I'm not hitting my fairways. I'm not chipping well. And he's not making that decision from his gut. He's making it empirically. Right. And he's serious about his game. He doesn't want to waste his time. Now, you don't have to be, Tiger Woods, to enjoy golf. But, for me, I mean, I want to, I want to play. I want to play competitively. And if I'm going to trade and going to do this, I want to make money consistently, and it's going to vary. But, and so that's a little bit of who we are and what we're about. So I want to thank everybody for coming by. We will leave this up. It's 1:30. I'll leave this up until 2. I've got to take a break. I didn't expect to talk this much. If you have any questions, let me know. We take a look at where Swing Machine is. It really hasn't been any change since we started at 12. The VIX is still, I'm sorry. Let's put this back to 5-minute, right? If you want me to plug in any markets, I'd be happy to do that. The VIX at, well, she actually started to go long. No, excuse me, short at 125. So she did have a little period of longness in there. She was long. Like we can decipher that. And again, we don't want to over trade the VIX, right? We can, right? We have a program that will trade the S&P based on what the VIX is doing, and it does pretty well, right? It'll do it automatically. But here we don't have to. It's not. The market isn't as fast and as sensitive as you might think. But the 5-minute ES went long at 8:10 this morning, and that long is still there, 7,800. It's been oscillating back, but the money is still there. The NQ is 805, almost 12 grand, still there. The Dow 810, the Russell 815, gold was at 745. And we're just kind of oscillating through it. This 1 minute went long 5 minutes ago, and it's up, 237. Probably gonna make the money. You're going to make, if you're taking signals, which I don't suggest you do on YouTube, you're on a delay. But if our members were here, and we have members listening on Zoom, when they take the 1 minute in the direction of the 5, they want to be going in that direction. They're going to make their money. They're going to make it quicker, and they're going to make more. And it's going to be easier if they're going in that direction. And now we do have members that have Swing Machine on their desktop, and they might configure it differently. They may not use 135. We have some members that use 2 and 7. Some will just use the 3, and just trade the 3 minute, which is also very good. So the 3 went, long 8 3-minute segments ago at 112, and it's up 337. So there's a technique for it. Swing Machine is also great for hedging. So why would you hedge too, by the way? Why hedge? When you use options, you hedge, right? When you buy a call long and then go up higher and sell a call, you hedge. When you sell a put and then go down lower and buy a put, a credit put spread, that's a hedge, right? You hedge. Why don't you hedge on anything else? Right? You know what delta means in the options market, right? Now, futures don't use delta. They don't use theta. You don't need to know the Greeks. Nope. Beautiful. And they're much, much more liquid. Much more liquid, much more fun. I do trade options, like I say, but they're so what is delta? Do you know what delta is? Covering a lot of ground here. Let me see if I can erase this little marker here. Can I just erase that? Yeah, I did. Okay. So I'll just go up here and use this little drawing tool. And let's see if I can do this. Looks like a seesaw, right? As a kid, or could be the body of an airplane here, right? This could be an airplane and left wing, right wing. If I go long here, oops, anything, stock, anything, if I go long and I go short over here, should I have done it the other way? Yeah, it doesn't look right. I'm sorry. Probably should go go long on this side, right? Just for some reason. Just so let's say we go long. It's supposed to be an L, and we go short on here. So let's say I have a specific strategy or a specific position. And if I buy 100 shares at a price and exactly the same price I short 100 shares, what am I? I'm delta neutral. I'm not going to make any money. I'm perfectly even. I'm balanced. Now, if I keep doing that over time, the only person who's going to make money is going to be the exchange, will be the commissions, but I'm delta neutral. So why do I want to do that, bagger? I don't want to do that. I just want to buy stock. Oops. See, I have I keep, but that's okay. I got a little drawing tool back here, but so if you don't have a short on, what you want, you buy something and you want it to go crazy up, right? Crazy up. You want that thing to go to the moon, right? And you're long and you're making a ton of money. But what happens when it doesn't go that way? And it goes crazy down, like Bitcoin, like Apple, like whatever. You lose. And you can lose big. You can lose big. So what if, this is what the pros do. That's why they call it a hedge fund. And you do this with options, right? You go long. Let me see if I can do this. You go long a call option. And then what you do, you might do something like this, and you get short over here. So that if it goes down, you make money on the short side, and you're making money here. So it's basically like the wings of a plane. What you're trying to do is, when you do this, when you get hedged on a position, you are trying to reduce the volatility in your account value. So you're trying to, rather than make a steep ascent and stall the plane, or a steep you get into a descent, you'd rather make a slow, gradual turn with your account. That's kind of interesting. And it works. And that's why they call them hedge funds. And that's why Swing Machine and what we're doing, we think is very, very good. We're trying to teach you how to run in essence, your own hedging strategy, so that your account, so that you don't focus on the individual trade, you focus on your account, and we want you to make gradual turns. And I can share with you how we can do that sort of thing. So for instance, using Swing Machine, on a 5-minute basis, we can set the machine on a 5-minute basis over here. We can set the machine to go long. And so what would have happened was, on the 5-minute, it would have gone long at 8:10, and it would still be long. And it would be up real time $7,700. And then what we do is we set the machine on a 1-minute interval to take the short, the short, not the long, only the shorts. Just opposite of what I just told you. We don't want to do it manually. You want the machine to do it. And so then when the 1 minute short comes in and the price is going down, this is going to go down right over here, but our short is going to go do what? It's going to go up. And what does that do? It levels our wings out a little bit. And then what we'll do is we don't put as many tools or exits in the 5 minute. We just let that kind of run. And then what we'll do is on the 1 minute, we'll put in some aggressive exits and profit targets and some aggressive exits to just capture a little bit of money. And then but if it goes long, it doesn't go long. We don't double up the leverage and then the hedge comes off. So, and the other comparison I make, if you like to watch some of those plane videos, there's a story about how there was a flight over Chicago where a piece of the engine, I think, came apart, struck a bird or something, and it cut the hydraulics to the airplane. And they couldn't turn. They couldn't turn the plane. So what they had to do is they had to improvise. They had two engines, one on each side, maybe one in the middle. I think the one in the tail section, I think, got blown apart. And so what the pilots would do is they would throttle one engine, a little bit more thrust than, one on the left versus one on the right. And they could slowly, and then there was some volatility in the plane. It was up and down, be a god awful ride, but they were able to get the plane turned a little bit, right? And try to get the place out to Iowa to land in a field. And I think some of the people survived there. So when you're hedging and you're doing that with options all the time, that's the image that I have. And I don't really focus on the individual trade that it's on, but I do focus on my individual account, my account. We get several accounts of the volatility. And that's what I'm trying to do. I'm trying to keep the volatility down, and I'm trying to make a sweeping upward tilt turn. I hope that makes sense. We use tools, we use the machine, we use programs to achieve that. It's pretty hard to do if you're, constantly got to be flying the plane, by hand. It'd be tiring. And then I couldn't be doing that, and still
Order filled.
Still chatting with you, right? I mean, those trades up there going in, and we got other accounts, and the machine's got them, and Susie's keeping an eye on things. So I hope that makes sense. But this is delta neutral. And when you first put a trade on, it's also referred to as probability of profit. So let's say Apple is trading at 135. And you buy a call option. You buy a call option at 135 for 30 days. And they say, what is the delta when you do it right at the money? 50%. It's 50. It could go up, it could go down. Probability of profit, not how much money, but it could go up or go down. It's 50-50 on that day that you buy it at the money. Now, on an option, you might say, oh, but geez, Don, if I got to buy that 135 call for 30 days, I got to spend $5. But if I go to the 145 for December, I only have to spend $2. What's the delta? It might be 20. What does that mean? The probability that Apple's going to be trading at 145 in December is only 20%. So you kind of get what you pay for. So what people will do, good option traders, what we will do, you're going to do a call spread. We'll buy the option at 5, 135, pay $5, and then go up, use the option chain, look at, that wherever the strike price is, where, say 145 is trading at 20% delta. And what do? We sell the call there, which is in essence a short. So we don't spend 5, we only spend 3. But we're not swinging for the fences. We're strategy trading. And you can do the same thing. Now that's a what type of option trade is that? That is a debit call spread. But you can also do credit call spreads, or to be on the long side, you could do a credit put spread. Let's just stay with Apple. Say Apple's trading at 135. You say, oh, I want to get long, Don, but I don't want to use too much money. I don't want to have too much risk. I'm going to sell a put at 135 for 30 days. The market's going to pay you probably $6, not 5, but maybe 6. Well, that'll be good. So if Apple's trading at 135 or higher come December, you get to keep the $6. That's great. You said, well, wait a minute. What if that CPI number sucks? And Apple goes crashing down, then I could lose my $600. So you take the, so if you sold the put at 135 for 6 on the day, it's delta neutral. But what if you went down to 125? What would the delta have been 125? Probably like 20%. The likelihood that's going to go down there is probably not so much. So you say, you know what? I'll take some of the $6 that I received and I'll buy a put at 125 that protects me to the downside. So you take a portion of that and you reduce your risk from trying to make 6 down to, $3.50 or $4. And you try, when you're doing that, by the way, which is not what I wanted to talk about, but you try to get the return, the spread to be about 35% of your spread amount. But the notion here that we're talking about is delta. And we, although we're not trading options here, we're trading futures, we're very much aware of delta and trying to, manage that. Make sense? It does. It's a beautiful thing. This is strategy trading. This is mechanical trading. Please do not look for, do not expect from us or from anybody a card counting system. I'm not using that word, a system. This isn't a card counting. If you're looking for some place to give you a program that is going to corner the market and you just don't have to learn a damn thing, you don't have to learn how to golf, you don't have to learn to fly a plane, you don't have to learn anything, and you're just going to turn it on, it's just going to print you money, that isn't us. I think you're looking for something that doesn't exist, and you're going to be disappointed because someone hasn't taken the time like I have to try to make sure your expectations are grounded. I don't want anyone coming to us. I don't. I want to make sure that a person's expectations are grounded. And if you think through, which I won't get into, but the way we got 2 levels of membership, and we try to give everybody the opportunity to basically take themselves out, like, this isn't for me. And very rarely do we lose anybody, because, so I hope that makes sense, is you get some insight. I'm going to let you just watch markets continue. Look at I'll go ahead and highlight this. Maybe I should do it in yellow, maybe, so it won't be so confusing. It's really, a day or two of watching this. Here's the 1 minute. So remember, so rather than trying to guess the top of the market or the bottom of the market, that's what every people are doing. We say, don't do that. The 5 minute is long, likely to be there. Don't take the shorts. 21 minutes ago at 128, that was the long. Remember, and now that trades up $537. That's a pretty nice trade. There are 24 trading days in a month, if you count Sunday nights when futures are open. That's the other thing. You got access to these accounts, these markets, like 24/7. So you can do the math from there. We try never to trade on Friday. So we're wrapping things up. We've had a great week. We won't be trading tomorrow. We'll be here. We'll be doing different things, but we won't be trading. If anything, maybe taking things off. But you can do the math. If there are 20, you take Fridays off, you got 20 trading days a month. If you make $100 a day, which I hate to equate it to that, but if you make 100 a day, that's $2,000 a month. 200 is 4,000. You know? And you got to work on that profit factor. Make sense? It's a blast. And I enjoy this so much. I'm torn. Do I want to play golf, or do I want to go fly fishing, or do I want to trade? I don't know. I mean, it is true. If you do, when you're doing something you absolutely love, it's like, I just want to do more of it. It's a blast. It really is. And but when I'm golfing, I'm golfing, and when I'm fly fishing, I'm fly fishing. I'm not trading. When I'm trading, I'm trading. Susan's done, right? Susie starts her days early. She has her office, and she does. It's great, right? It's kind of like well, she has her style. So she very, very rarely does she have, huge, these are huge wins. Very rarely will she have these huge wins, but she always puts the ball in the fairway, so, she, like on a day, she just comes in and just does it. And she thinks it's, Susie is the math prodigy, right? She is, I'll tell the story. I tried to work at IBM years ago before Susan did, and they wouldn't have me. You had to take a test in the old IBM. In the old days, IBM was the place to go, right? That was the Google of the day. They had to take a test, and they tested your, I did not know, but I didn't get in. And when Susan went to interview, I'm like, why do you want to do that? You're not going to get in. That's terrible. She got in, and they told her, they gave her like an IQ test, and she's got like a Mensa high IQ. She's really, really good at math. So, and so that's really helped. In the beginning, where I had been doing all the trading, I found it really frustrating actually, because she would ask me all these questions, and it was always from a math perspective. And I'm like, why? I wouldn't even understand why she was asking me. Like, why are you even asking me that? Why? What do you, well, and I'd have to be like, okay, yeah, all right, yeah. All right, yeah, that does make sense. Okay. So, and but like there were different things like that I think about. I can remember one time where I was struggling with a program, and so a lot of it is numbers, right? Representations and trying to capture images and so forth. And the number would always be a negative. And I wasn't interested in the value of the number. I just needed the number itself in the program.
Order
And
filled.
oh my gosh, how I can't, but it couldn't be a negative or the program wouldn't work. And since we'll just make it absolute value. I'm like, what the hell is that? Oh, it just turns a negative number into a positive number. I'm like, oh, okay. I mean, I never heard of such a thing. And I look up and in the program and you just put absolute value, ABS. I think it's just ABS, and it will turn a negative number, which we really weren't concerned with the value, but turns the negative number into a positive number. And then voila, program works. So it's been great. It's been great. But I hope you've enjoyed it. I hope you're doing well. If you're getting it done, keep doing what you're doing. And if you're not, what we're not, our videos at night do provide plenty of opportunity for trades. They absolutely do. We may not highlight every single one or comment on every single one, but we try to present the videos so that there is plenty of opportunities, more opportunities than there's money for. But what we're not doing is we're not like, tweeting out or emailing out, buy this call, sell this call, do this credit spread, do this debit spread. If that's what you want to do, that's fine. There's services for that. Good luck with that. I'm not saying anything bad. Some of them are probably pretty good. I just don't think you're going to learn anything. And we set out in the beginning that I was adamant, as I said to Susie, that I did not want to do that. I wanted people to learn so that they could feel better and better and in more and more control over time and really push the tools. And it's kind of worked out really, really well, because then our members come back and say, Don, such and such a program, such and such of this, we could do this or we could do that. So our conversations many times revolve around doing that sort of thing. And that was always the dream. So we're basically, our members, they're all running not a public hedge fund, but they're basically hedging their own wealth, their own thing. And hopefully trading very responsibly. Before we go, let's put the skew back to the S&P, and let's take a look at a daily basis of where we are. Let's see, it's a dollar sign, I think, SPX. This is the S&P cash, right? And so we keep an eye on the S&P cash. Here's the daily. So on a daily basis, the machine is flashing along on a daily basis today at 39.20. We can drill down, right? We can do half a day. So if person had put this on a half a day, you can get inside everybody else. I'll give you a for instance. So let's just do that. See where this thing would have been if you were doing a half a day. Yeah, so you would have been in 8 half days ago. You would have been in on the 7th if you were trading in a half day, and you would have been in at 37.84. And you'd have not $135, but you'd have 135 S&P points. If you bought a call option there, you're up 13 grand, on a half day signal. But I'm going to put it back to the daily because that's where most people are. And so where are we? It's just getting along now. The centerpiece is 38.03. So it's got to hold 38.03, but we're pushing up, and we're going to, we're probably going to get up into euphoria. And that's probably going to be in and around Thanksgiving. We do not buy stock or buy anything in euphoria. You do not doesn't mean go short it because you're in euphoria, but on a daily basis, you don't want to be doing that. The likelihood is when you're at these extremes, when you're in euphoria and you're in or panic, the likelihood that we're going to move back toward the mean is 95%, right? That comes from all the option traders, right? So, but we're above the mean, and these markets are going higher. They just are. On a daily basis, they're going up. Let's look at the VIX. Let's see if the VIX confirms this signal, and it does. The VIX is below its mean of 27, and it's headed down. When are we going to know when this is done and we're going to get a significant pullback? When are we going to know? We're going to know. Now, I don't know if the market's going to, give us this clean shot, but it usually does. It won't last too long. It'll usually last for a couple of days. The S&P will move into euphoria. And where will the VIX be? In panic. In panic. And then that skew that we pushed off of, wouldn't be surprised. And this is what we've been seeing over and over again. The skew starts, you would think the skew would start to go down. It doesn't, it starts to go up. And the big money, what are they doing? They then start with their big positions. They're selling calls to all the speculators, and they start to buy puts. But we're days away. And looking at it on a calendar, we're probably going to ride this into Thanksgiving. Now, be aware, I do remember a Thanksgiving or two. Normally, Thanksgiving week is bullish, and it looks like it's going to be this year. It looks like it. But I think it was 2013. They're funny how you remember this. It's like a golfer who remembers that golf shot. It's like, Susan will be like, what's with you? You can't remember, I go to the store and I can't remember but you can tell me a golf shot that you did like 3 years ago on, Coeur d'Alene, Idaho or something on the third hole. What? That's just the way we think, right? So I can remember and I think it was 2013. You have to look it back up, but Black Friday turned out to be a black market. It was a really down day. It will be open. It will be thin, but I'm not saying it's going to happen. No, we don't do that here, right? And I don't do time cycles and I don't do all that other shit. But we're just tracking what we're doing right now. So here's this 32-minute long, this 400, still $400. Now, we're running these wide, right? Or wide open. So this is our dashboard. You can put this on a chart and we may have members. It's entirely up to them, right? If somebody went in and put that trade on 33 minutes ago and made $350, okay, then that's what they did. That's fine. It's okay. Don't go, don't go, we suggest they don't go back in. Now it might run and be up $1,000, but they don't beat themselves up because they get their money in. You don't, you play golf and, you make a decision to, on a par 5 to get yourself in better position on the third shot and you get on in regulation and you get a birdie. You don't beat yourself up because, oh, I should have hit it on in 2 and gone for the eagle. You don't. You just pick up and tee up and go do it again. Go play the next one. So I hope that makes sense. All right, it's 2:00. That was wonderful. There's quite a few folks here. More than happy to answer any questions on what you're seeing. It isn't, I'm not presenting this though, please note, I'm not presenting it red light, green light. It isn't. It's presented in a very usable fashion and it was meant to be that way. Like I say, I wanted Susan to be able to, so all these tools came about so Susan could manage our money. That was the idea. And then it got to be too much fun. And it's like, oh, I can't let you have all this fun. So I never went back. But I wanted her to be able to come into her office at any time, could be in the morning, could be in the, whenever that was, and look at virtually the same thing every day. And you can put in here whatever you want and get an objective, consistent view that is put together. And we explain in detail how this got put together and why and how and why it works. And so you don't need anything else. She would need me, right? She, you don't have to. Our members don't need at this point, we try to help around the edges and at night as we go through market cycles and seasonal cycles and things of that sort. That I can certainly pass on different things that I've seen. But the day-to-day, they got the tools that they're doing their own thing. They're fully equipped to do their own thing. And that's good. That's what we want. We always wanted it that way. Get that Dow up 1,000 points. So I'm going to, I said I would turn it down at 2. We're going to let you hang in and watch. Okay. If there's any questions, I'll come in and answer. I'm going to take a little break and watch. I'll focus your eyes. The most sensitive aspect of this, see, we have 5 markets, but you want to let's just focus on the ES for a moment. So it's long, 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 right? We look at the 1 minute. The 1 minute is going to be most sensitive to the other 2. The 5 minute is going to stay long. It's going to take, in order for the 5 minute to get short, it's going to take at least 10 minutes. So that's, a long time and not likely. The 1 minute is long, 37 minutes ago, and it's continuing to track at that price. This part of the tool is trending up and the ball flight is up. It's all green. These are the individual trades. Now, if there's any selling to come in here, it will be the trailing stops of other machines from hedge funds. And you'll begin to see in here, little red boxes start to show up. That doesn't mean go sell, but it might mean, you know, and Susan will do this. So like if Susan takes this, right, and she'll be up like 7.25 and she'll be watching. And then as soon as she gets a little bit of selling in here, she'll bang out. Okay. And it's fine, right? You all have a trading personality. I'm not out to change it. I wasn't out to change Susan's. I was out to give her the tools so that she could manage her emotions. And I would like for her to stay longer, but I don't, try to force that. And if that's what she wants to do, if your eyes watch here, and it'll be up or it'll be up. But if you see any little red bricks here, just know that if Susan's in this trade, she's coming out. Now she won't short it. She'll just come out. And that might be her only trade for the day. In fact, she is done. She's already done. And say, we don't beat ourselves up like, oh, we could have stayed all day and made more. No, rest. You can't, pilot can't fly, coast to coast, day after day after day after day. You don't do that, right? You don't go out and play 36 holes, although it's tempting, every single day. I have played 18 holes. There was a stretch there for like 2 years. I played golf every single day. It was beautiful every day, rain or shine. Now, this panic euphoria is a wonderful tool, especially at the daily level, on the hourly level. And so what I might want to do, and so I'm giving you some hints of what we share with our members. I'm going to come to the ES, and I'm going to change it to, this is the S&P, to a 60-minute. Where's the 60-minute? So the 60-minute, which is a big chunk of time, is showing me the midpoint is 38.42, right? So I don't want to certainly be down that far. But on the greed in euphoria, I'm only at 70. We could go much higher. If the hourly gets into euphoria, I would strongly, suggest to our members that they bring the cash register. And it looks like it's going there. It really does. And so, and this is what's crazy, right? So remember, I showed you earlier, everyone was focused on that CPI, and you may have been you're trying to make like that, that perfect trade. I got to get it now. And you rush in and you rush out. Oh, I should have stayed. Oh, I should have done this. Oh, I should have. You just need to catch your breath, get used to watching Swing Machine. You could have put this trade on at 9 a.m. At 9 was an hour later. And yes, you'd be up $2,700. But this is the thing. If you are not settled in your trading and you're doing it with a mini and you are reacting to the money day in and day out, you may have picked up some bad habits, right? And you start reacting to all those hazards that are out on that golf course, the lake, the sand, and you get up there, to that tee box, and you're like, oh God, this son of a bitch hole, every time I'm on this hole, brother, I put the ball in the water. That's not good. You will put the ball in the water. You will. The mind is an incredible thing. So you need to be able to block that out, right? So there's a mental aspect to golf, any sport, anything in life. You need to block that out. So if you are reacting to the money, 99% of the time, you're too big. You're too big, right? And the good thing is, when Susan started, we didn't have micros. So if you wanted to trade, on an hourly basis, I would strongly suggest, and you're new, trade a micro. And if you went in at 9, you would be up $270, which would be fine, right? But but if you are new and fearful and greedy and all those things, then, you'll have a hard time and you can't stick around. In the beginning, sometimes we get members that will say like, I don't understand, Don. I don't understand. I see it. I see the trade and look, it's up $12,000. But Don, I didn't. I'm only up $500. It's because they reacted to the money. They're too big. The leverage is too big. And you have to just slow your breathing down, slow everything down, and bring your size down. And so that, and it just comes with time. And if you stand up to the golf hole and you're like, yeah, you don't even think about what happened the day before. You just like, okay, I focus on the fundamentals. I get my stance, I get my posture, I get my grip. What water? I'm just teeing, and I tee off and I hit. And the mind wants to reflect backwards, and we want to reflect forward. We're programmed that way as humans, right? The last time I was out on the Serengeti plain, I got chased by a lion. It wasn't so good. And then they're always like, out there, it looks like out there in that Serengeti plain, it looks like lions out there. So we're always, we look back and we look forward, and we're trying to avoid what? Pain. And we're trying to seek pleasure. It's the way we're programmed. What I'm asking our members to do, slow the breathing down, slow your trading down, become mechanical, you get the leverage down, practice, 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 and just react. Stay in the here and now. Don't think back to the previous trade. Don't think ahead. Don't equate the money to an outcome. So this is one of the things that I don't think the folks understand on the Twitter sphere, how they're screwing themselves into the ground. You see it all the time. You'll see it today. I made $20,000 and I'm going to go buy this. I made $5,000 and I'm taking my wife on a trip, right? They're rewarding themselves with the money, that they make. That's very bad, because when they don't make that money or they lose that money, it then becomes exceptionally painful. And if you start experiencing too much pain in whatever it is you're doing, you won't do it anymore. You won't want to do it. And that's not good. If you like to play golf, and every time you miss a putt, you throw your clubs in the lake and get real mad, get real angry, then guess what? You're probably not going to be golfing very long, or whatever it is, right? So all I'm trying to do, even here today, for the few folks that are here and that come by, just trying to make you aware of some aspects. And we go through this, for 3 weeks, and then on an ongoing basis. And it works. It works, if you can park it. You got to park it. There are four stages of learning anything. And the first stage is you must become aware of things you don't know. Right? Every day I come at this, that there are things that I don't know. There's plenty. Trust me. I watch this radar very, very intently. Shit can happen really fast. It can. And so, I didn't know this. I don't fly. I'm not a pilot, but I watch those pilot things, and I did not know this. There's a guy, Blanco Iorio. No, not Iorio, but that's Jim Iorio, who's a great guy. Blanco Iorio, I think, and another guy, Probable Cause. And they analyze these plane crash act. But the other guy, he's a commercial pilot. And I did not know this, but I guess it makes sense. He says that, like, before they take off, they're constantly they have a whole protocol for if one engine goes out or where they're going to go, what they're going to do. You don't think about it. You get on the plane like me, you get a magazine out, you get your phone out, and but those guys are up there and they're going through a checklist, and if they run into a problem as the plane is taking off, they're thinking about where they got to go, what they got to do. They're not doing it, like, oh, now what? Right. And he goes, they're constantly doing that, even when they're flying over the ocean, even when the plane is flying itself. Do they dwell on it? No, probably not. Do they get fearful of it? No, they've drilled on it. That's what they're paid to do. Right. Um, so I keep my, eyes on Swing Machine and on our other tools, and, I'm going to be prepared to react if I have to. And I know what I'm going to do in certain circumstances. So that's where it's very, very comforting. So we have other screens, but this is a very, this is central. So I could be going to charts, but we don't really even do that. We don't use moving averages and MACDs and that stuff. We're not, but we can get the program to map some of that stuff if that's what you want to do. But we certainly can. But the second stage, first stage, so you become aware of what it is you don't know. And then you have to make a decision whether or not you want to learn something. So you usually go to somebody who is doing the thing it is that you're interested in learning. I use the example of fly fishing. I like to fish, but I didn't know how to fly fish, and I was interested. So I went to Bass Pro Shop and went into the shop and started asking him questions. And, he taught me all kinds of things, and I was interested. When I went into that fly shop, I was consciously incompetent. I was aware of things that I didn't know. After a few weekends of going down and talk to this guy, and he brought me outside, actually, imagine he brought me outside the store and we practiced throwing the fly and everything. He made me, in a short period of time, consciously competent. I had all the gear and I could throw the fly, and I practiced, and then we went on some trips and I went out to go fly fishing, and I did. I went out and went fly fishing, and it was great. I didn't catch shit. I didn't catch anything. And Sue's like, "Hey, you ever going to catch a fish?" I don't know. But I ultimately, and I've told the story before, but then I found a guide, and then he educated me on what else I needed to do. And then I started to catch fish. And now, when I go fly fishing, I'd like to think that I am unconsciously competent. I don't have to think about what I'm doing. I just do it. And I catch fish. Not all the time, but sometimes, sometimes. And when I'm trading in the beginning, I'm describing this to you and this to you and this to you, and you're listening and you're like, okay. And, initially maybe for several days, maybe for several weeks, maybe for a few months, you would have to consciously execute. But then you won't. You'll actually become unconsciously competent at trading Swing Machine. You just like, we have members here and they can hear me, and they're like, yeah, yes. And here's the 1 minute. You see it's getting a little bit of sell. So you want to take your 675, take it. But just know, if it, and you take it, you don't beat yourself up. It may continue. That may dissipate, and it still might continue up a point. So to that extent, we don't get the very, very top. We don't get the very, very bottom, but we're playing for the middle. And we come back to the profit factor. We're trying to capture 3 tokens or more for every token we lose. And if we can do that, we're going to become money-making machines. And that's it. And you don't need to listen to CNBC. You don't really even need to listen to me. You get some insights on the nightly video, on the tools for sure, and on the programs. But you don't really need anything. Because when people want to buy Bitcoin, they will buy it, and it will be doing what it's doing. And when they don't, they won't. and they will get out. Or they will lose everything. Or other stocks, like, have you seen some of these stocks? Carvana, $400 a share. I think it's like at $7. Why would somebody do that? Imagine having 1,000 shares of that, 400,000 to 7. It's like, why would you do that? Do you think Swing Machine would have said to get out of Carvana? I don't know what the symbol is, by the way, if you want me to put it in. Let's think of another one. Oh, how about Meta? All right. I'm just going to have some fun here. I'm going to just plug in a stock. How about Meta? Meta. It's a stock. All right. So on an hourly basis, Meta said to get long 12 hours ago, and you'd be up $7. That ain't bad. Could have done pretty good with those call options at 103. And that was yesterday. But what if you're a long-term holder? And what if you're a daily view? So let's go look at Meta on a daily. It said to get short Meta 59 days ago. Now the purse is only showing 57 because this is configured right now. The purse is configured for futures, which is leveraged. We can allocate money to reflect, how many shares you got. So this reflects one share. So if you had Meta plugged into Swing Machine on a daily basis, it would have said to get out 59 days ago at 167.96 at 4 p.m. on August 19th. And you would have saved, one way to look at it is you would have saved yourself $57. That ain't so bad. Now, if you bought a put, yeah, you did really well. But you say, well, but what if I'm an investor? I'm an investor, Don. I'm not a trader. I'm an investor. I love that one, right? So let's change it to a weekly. Check this out. 42 weeks ago, 42 weeks ago, it said to get out at 301 on January 28th. You could have saved yourself 190 points on Meta. I don't know what else. I just don't get it. But, and if you want to change it to a monthly, we can certainly change it to a monthly view. And let's take a look. On a monthly view, on a monthly basis, it's said to get out, on a 7 months ago. But the weekly would have been the sweet spot. Now, what's going to happen is, if folks don't understand what it is they're buying, they don't understand the interval, and they don't have an objective. You might say, well, I'm an investor, and I see that Don's got it, on an hourly, he's long, so I guess I'm okay. No, not really, not so much, because see, we could stay in a trading range on Meta or on the S&P. Just, you need to know this, from 1966 to 1981, the markets stayed in a trading range, went absolutely nowhere for 16 something years. The only people who made money were traders. We could stay put. Meta does not have to go back to its old high. All I can tell you is, though, if you bought call options, which we did on Meta 12 hours or more ago, you'd have $7. And I closed my options. We had options on Meta I put options on at 95, and I closed them this morning, and they're like over 100%. And we'll come back and do it again. I'm not an investor right now. There will be some things that we'll invest in. We're investing in gold and silver right now. But we're traders. So if you don't want to plug in any other stock, how about, here's one, Robinhood. Let's go look at that. All right, so let's change this to a daily time frame. Okay, it was short 2 days ago. All right, so it's kind of basically flat, but let's go to a weekly. Okay, so we're getting a pullback here in the markets and see, but we'll just take a quick peek at a weekly view. So Hood is actually short 47 weeks ago. And let's change it back to a monthly. It wasn't even around long enough, so I'd have to adjust the settings to get a read on Hood. That's Robinhood. So we'll put it back to ESZ so we don't lose track. But you can use Swing Machine, and we would need to use a continuous contract here if we're going to go back monthly, and I'm going to put it back to a 5 minute. So there we are. So this 1 minute, you can see the selling coming in. It gives a short entry. So, if we had taken that, if you took the $700, you would take it. If you're watching Swing Machine intently, which I assume you are at the moment, be aware that the machine is hard coded. It's possible on a 1 minute time frame in a very fast, wide ranging market, we could see some imperfections of the rotation. It's not normal, but it can happen, especially on a day like today. Less likely at the 3 minute and the 5 minute level. Just want you to know that. When we go through the Q school, we spend quite a bit of time explaining where those are and why they come in. So I just want you to be aware. If you have any other questions, don't hesitate, and we'll let you watch till 3, and I promise I'm going to shut up. It may be appropriate today being, I'm back. It may be appropriate with today being a kind of a hurricane, small one coming across Florida, here in Central Florida. And thank you, Tina. We're doing just fine. To the little market hurricane we're getting right now. What I wanted to share with you, I mentioned, there are 4 types of trading. Trend follow long, trend follow short, counter trend short, counter trend long. That's it. Those are the only 4 things you can do. But it isn't that simple, right? Because the challenges or the problem is that every trend starts with a counter. Every trend. So the comparison we make, well, I probably shouldn't do this anymore with the year that we've had with hurricanes, but every hurricane that develops in the Atlantic starts with a butterfly that bends over and farts in the Sahara Desert and kicks up a little puff of sand, and then it becomes gets up in the air, becomes a thunderstorm, comes off the Cape Verde Islands, develops in a bigger thunderstorm, and becomes a hurricane. Every single hurricane starts with a butterfly fart. So therefore, every hurricane that hits Florida, we can say started with a butterfly fart. Every single one. So the storm we're getting hit with, thank God it wasn't that bad, started with a butterfly fart. But Every butterfly fart does not become a hurricane, nor does it become a thunderstorm. Counter trending is a butterfly fart. There's a lot of them, but not every counter trend becomes a little mini hurricane. For us in this configuration, the 5-minute time frame is our driving force. That is our little mini market hurricane. The 1 minute are the butterfly farts. So what we teach in the beginning, at least in the beginning, is not to take every 1 minute trade, not every single one, but to take the 1 minute butterfly fart in the ones you may choose to. Maybe you look at your chart, whatever that chart might be, and take that 1 minute in the direction of the 5-minute hurricane. And that's how, you can get into trades like this. 84 minutes ago on the NQ, you're up $1,000. And you can manage it on the 1 minute. And so although, you could get in, you may not have gotten this trade, but you may get into the 1 minute 2 or 3 times today. And that's what we do. Now, our members get really, really good, right? They get really, really good. And they understand it and have seen it, hundreds of thousands of times. So then they will, it's their nature, it's just the style, and they may choose to take some counter trades, and they can be, it just depends upon, their one's trading personality, how aggressive they want to be. Others, more, whatever. It's not a good or a bad thing. It's just, it is what it is. But we try to strip it down, make it gradual and very mechanical in the beginning, and not as frequent. When I'm trading manually, if I'm looking at Swing Machine and trading manually, hitting the golf shots, I don't want to trade. I try to trade about 5 times a day, if that. Try to keep it down low. That's enough decisions. If I've set up a program, one of our programs to trade, then that can trade. I don't even care how many times it trades. It can trade 20 or 30 times. Doesn't matter, as long as my account is moving in the right direction. And there will be times when, maybe, and I prefer my profit factor when I'm making the decisions. I prefer my profit factor to be up over 3. If it's 1 to 2, it feels like a grind. If it's 2 to 3, it's okay. But over 3, it feels pretty comfortable, and anything over that is great. Now we had a member not that long ago, and he had a profit factor for a week of over 80. Now I don't know what the money was, but because we know how profit factor works, if he lost $100, he made 8,000. If he lost 1,000, he made 80,000, right? And you can do the math from there. Lost my train of thought. Well, the machine, where the point I wanted to make. The machine the other day, we ran a program and it did well. I want to say it made a few $1,000s. The profit factor for the machine on that given day was like 1.4. That would have been really hard to do for me manually, psychologically, because 1.4 is like a bit of a grind. But I didn't care because the machine was doing it. And in the end, it made its money, and it was able to get it done with a profit factor as low as 1.4. Why? Because it's a machine. 90% of all the trading that you're seeing and all the buying and selling is machines. You know that. And it is. And you have an opportunity. The technology is there, the internet speed is there to graduate and to get involved and get, start heading in that direction. there's not too many people. I traverse the Twitter sphere. There aren't too many people or anybody doing what we're doing, and anybody really teaching it the way that we're doing it. I just don't see it. But if there is, but I don't see it. So if you want me to plug in one of your stocks, or one of your markets or any of the on an interval, you let me know and I'll be happy to do it. Enjoy. Hey, Yosi, how are you, buddy? I wish we could talk back and forth on YouTube. I can see you chat, but I guess we don't have the status yet where we can chat back and forth by sound. But I hope you're doing well. This is the same Yosi. I think Yosi is a relatively new monthly member. And Yosi, this didn't catch you by surprise. I hope not. Shouldn't have. Hope you're doing well. We can plug in some other markets. Let's take a look at gold on an hourly basis, right? Let's graduate. So you say, I don't want to trade it that frequently, Don. I'd like to trade. Yeah, I thought so, Yuzi. Yeah, good. Let's put gold on a 60-minute. So check this out. On a 60-minute interval, 107 hours ago, gold swing machine said to get long gold at 1 a.m. on November 4th at 1648. And Yozi's here. He's a monthly member. And we've been talking about this on gold, for the last 2 weeks here. A futures contract, a mini futures contract, you're up 10,000. If you got 5 of them in here, you got 50 grand. If you have a micro, you're up 1,000. If you put on call options, you're up a bunch, depending upon how far out and where you got them and so forth. We did a little of all of that. And on a daily basis, though, let's take a look. Where is gold? This is where it can save you some time. So you say, well, wait a minute. I get it, but that hour might come back, right? So in fact, let's look here on an hourly basis. Gold is up in here. It's not quite in euphoria. We can disregard. That's on a 3-minute, it's in euphoria, but on an hourly, you could still get in higher. The mean is about 1731, right? So it's leaving that behind. Not likely to come back. This can also give you a great place. Like another way to get long gold is to sell puts, and I'd probably sell them at 1730, But how about on a daily basis? Where are we on gold, right? Because I know what you're always thinking. It's always a mental trap. It's like, I missed it, or it's going to come back. So let's look at it on a daily. Ooh, okay, so it is actually up in here. So I didn't expect this. So gold it's made a big run, big charge. So on a daily basis, she is in euphoria. Not on a daily swing basis, probably not the best place to initiate a long position. On a daily basis, if you're a daily swing trader, I'd want to let it come in a little. And it doesn't mean that it's going to be today or tomorrow, though. I mean, it could still run. If you are long shares, what you could consider doing is selling calls against that. So when it pulls back, you've got, a bit of a hedge on. But maybe you're a weekly view. Maybe you want to be a weekly investor in gold. All right, so let's take a look and see what that means. So on a weekly basis, gold has been short for 20 weeks, but look where it is. It's up over its center on a weekly basis, 1704. It's got plenty of room to go. So what does that mean? It means that on a weekly basis, it's still short. They're trying to buy it up, but it's still in a short stage. So what I would do, if you want to be conservative, is maybe, and you don't have to use futures, you could be using a proxy like GLD. Maybe you don't go in with your full position. Maybe you go in with half a position or a quarter position, expecting that on a daily basis, it's probably going to pull back. If it keeps running, you got a quarter in. If it pulls back on the daily and it holds and it starts to go again, maybe you add another quarter and another quarter, so that ultimately when the weekly trend kicks in, you've kind of edged and wedged your way into a longer term hold, right? That's the idea. But so we'll slide gold back to a 5 minute. It takes some planning, and if you're trading options, you get plenty of time, right? You should, right? You shouldn't. You get plenty of time to map out options. I literally have in my office, in Susan's office, yeah, it's from our corporate America days, right? Susan's IBM days. I got a tripod with a whiteboard, even though with all these computers, and we have a whiteboard. And when we go to get into positions that are going to be, we're going to have for a while, we map it out. And Susan, has a seat and says, okay, map it out. And I map it out. And then she says, no. It says half. Or I say no. So we usually have to agree, or we do. But Susie does manage all the options. Once they're on, I just defer to them, because I know she will manage them like there's no tomorrow. Our rule of thumb on options is lose half the time, we come out, lose half the value of the premium, we come out. Hit options, I like to get sometimes at least 2 on, so that if we double our money, we take 1 off. And I usually, the way we trade options, which is not a lot, I usually only put options on if I think that I have a shot at doubling my money. I usually won't do it. I'm not playing for pennies. Nothing wrong with playing for pennies. There are folks that do that and do that quite a bit, do it quite successfully maybe, but a little too much work for me. Yeah, so gold is even here on a 5 minute, likely to come in a little. Good to see you, Yosi. I hope you're doing well, though. Anything you want us to look at, anything I can answer for you, let me know. And I don't even know what, I have to look at the headlines. I haven't even had a chance to look at any. We've been tending to things around the house. We didn't lose any trees, knock on wood, but we had a lot of debris down, so we've been managing that. It was a little hairy there in the 3-4 o'clock in the morning, but not too bad. Hey, Yosi, you said, what is the best time to call? Today you can call. We're gonna actually I'm letting folks watch this, so you could call right now if you want, Yosi. But you can call anytime. You have my number, right? Everybody does. My number is I should have put, yeah, it's right there, 813. You're welcome to call anytime. For the benefit of other folks here, Yosi Yosi has been a couple of months, right? Yosi and I talked a couple of months ago, and and he became a nightly member, or what we call a monthly member. And I'll just share this with everybody. Unless, if I get to pick up Yoshi's call, I will. We basically have two levels of membership. We have a monthly membership. It's $99 a month and $100 a month. And we make a video representation Monday noon. Yeah, that'd be fine. Yeah, that'd be fine, Yosi. Yep. I'll make a note. I'll be here for you. That'll work. And the monthly membership, we do a nightly video where we review what the algos are showing us. Embedded in that are opportunities. We're trying to show what we see, what the interpretation is a little bit. I really try not to give an opinion. I try, I'm human, but I'm trying to show what the skew is showing and how I'm interpreting it. You never know. We did interpret this correctly this time, so I feel better about that. We've done pretty well with that. I wish it was a better timing tool, but it isn't. But it did just fine. We've gotten some wonderful trades off of that thing. Big positions stuff. But that membership is month to month, and it's by design so that if anybody joins and they're not happy or not, the value isn't there, they they don't, it's only $100, right? So it's month to month, and usually we don't lose folks. The other level of membership we have is annual, where you get Swing Machine Plus and all of our other tools on your desktop. Now, we call that an annual membership. There's a couple of prerequisites there. One is that you have to go through what we call a Q school. And we will work around your schedule. We'll try, and it's usually three plus weeks. And what we're trying to do during that Q school is we're trying to get a feel for the challenges you'll face, give you a chance to see it, but also you get a feel for what we're doing, how we're doing it, and how these tools work. And we just keep going. And we're trying to lay out what we call a buffet table of choices. So you get it kind of all laid out. You don't have to be a TradeStation user at that point. In fact, probably most of the people are not. At the end of that Q school, and you only do the Q school once. Q school comes from the golfing theme, right? The qualifying school. And at the end of the Q school, we hope you've had a really good experience. We hope you feel like you've learned a lot, that we've challenged you, you've challenged us. And then at the end of that, you have a decision to make. And the decision is this. You could opt to leave and say, okay, hey, Don, I'm going to take this information and go do things on my own. It is transferable. You could even cancel your monthly membership. Now, we hope you don't. We hope you stay with us, at least as a monthly member. But more often than not, the vast majority, almost 99% of the time, the consideration is, I want, you know what, Don, I learned a lot. I had a great time. I now want to become an annual member. So that Q school period is a $3,000 investment. When you go to become an annual member, though, what we will do, if you decide, hey, I want to become an annual member, we will credit you back $1,000 on your Q school, right? We'll credit you back $1,000. The annual membership, at that point, you do need to have TradeStation. And we'll work with you so that you're not paying for something you don't have. You have TradeStation. We will, the annual membership for the first year is basically $4,000, $39.99.95. And so, but you do get your $1,000 back on the Q school. Then what we'll do is we'll begin sending you all these files to TradeStation for you, and we can help your learning curve. TradeStation's excellent. They got excellent support. We're not trying to replace that at all. We just augment it and we can help you get up and running on TraceStation like in just in a few days. Although their tool is unparalleled. There are still things at TraceStation that I haven't discovered, and I've been with them, 15 years. It's crazy. They're so good. I can't. I don't know why everyone isn't using them, but they're not. But they're really, really good. And I have no relationship with them. I just can't say enough good about their product. And I spent 20 years in surgery. It's like a surgical tool. So then we will send you these files, and they're encrypted, they're coded to you, and you have full use of them. Where you still have access to come into a view like this, not on YouTube, but on a Zoom. And so whenever the markets are open and we're trading, which is just about all the time, or the markets are open, we have a Zoom link up, and our annual members can patch in. So it isn't like I go away. I'm still here. But we don't maintain the intensity, because I can't, of like a Q school. But we haven't had any issues in that regard, though, either. If somebody is struggling or not sure about a particular program and not sure about this, they know where I am, right? So you can reach us just about any time. So you can call, you can text, you can come through the Zoom, you can schedule private time. So now they still have manual, our monthly members, but they have everything on their desktop as well. Then during the year, we will come out. We got new things coming out in the next couple of weeks here. And we're constantly updating, coming out with new things, and there's no additional cost on that. Also, if you have things that you want us to work on, to try to develop, we will try to do that. We're working on something right now, and we can't commit to a time frame, because sometimes they may seem simple, but they can get kind of hairy. So we're working on a little program now that is, we got two pieces of it, and it appears really simple, but it's like a real coding challenge. And so we're working on that, and it's probably going to stretch into the weekend to get that done. And then what we'll do, and so there's no cost on that. And then these programs go into a beta group, and there are members that have told us they want to be part of a beta group. There are others that say, hey, I'd love to, but I don't have the time. But if that passes muster on the beta group, it goes into a library of files, and everybody gets it. So that's basically what we're doing. But you're trading your own game. I can't, and I said this to Susie. I'm like, Suze, I can't, and I won't. No, this was kind of hard, but I'm like, you gotta, you want to play golf, you gotta, you gotta swing the club. I can't put a hand on it, and you can't have a hand on it, and we're gonna do that. You have to play your own game, and that's the way we structured it. It's more fun. I set this up the way that I would have wanted to be treated, and I set this up with Susan the way I thought people would want. I mean, it's your money, it's your time. You guys have tremendous backgrounds, tremendous experiences. This isn't brain surgery. This isn't surgery. We set it up like it was surgery, but it isn't. I have contempt for CNBC. I have contempt for, all the riffraff around it. Thank God I didn't work for a bank or around it. I would have been disgusted. So in any case, so we kind of strip it down, but that's how we structure it, and why, if you think about it, we are gearing up maybe to do some, and the other thing is that we're always trying to do, whenever someone joins, we lock in their pricing. The pricing too, by the way, the annual pricing goes down a little bit the next year, and we try to extend additional time. So what we're always trying to do is offer more value for less cost. So it never goes up, and we only add more value. And we're going to be trying to do some things, we think, for next year. I'm not sure yet exactly, but could be significant in adding more and more value. We're growing pretty steadily, and we don't advertise. We just don't. We do like Twitter, and we do like YouTube to create awareness, but we don't advertise. So, and it's just us. And so But noon on Monday, get it penciled in. You just call anytime, Yosi, and have a wonderful weekend. And this continues to push on up here. Bears are trapped now, and the close is important. Now this market is still got a high VIX. It is trending down, but it is stuck at 25. So that what does that mean? The volatilities come in. I don't have the dollar up here. I'm assuming the dollars come in. The other currencies around the world are probably running. The treasuries are probably running because the rates have come in. The spreads are probably widened. So the banks are running. Real estate investment trusts are probably running. We mentioned last night AVB. Let me look at AVB. I'm just going to plug it in here. Avalon Bay. My guess is it's running. Stuff like that. Yeah. Oh my God. Are you kidding me? $10. Holy mackerel. Wow. Wow. Okay. Now we said that in last night's video, even the last couple of days. I didn't, that's a big move. Why is that? Because the rates come in. So there are these things, there are these programs that you can write. We can write too. Rates up, sell this. Rates down, buy this. And it just needs to be done. They don't waste any time. and you can't be waiting for somebody to map out a 50-day moving average. That stuff is ludicrous. The 50-day moving average and the MACDs and stuff. It's absolutely ludicrous. You don't, it's too late. But Avalon Bay, that's huge, right? So just 1 or 2 of those a month. But beautiful thing. Let me go look now. Out of view, I don't have everything in view, and I don't want to change this view. Let me just take a quick peek at a couple of things here. Okay, yeah, this is beautiful. Okay, that's great. So those trades you see up there that are going off, those are little micros. So we got a little micro positions going on, a few things. It's profitable. It's doing nicely today. Nothing crazy. Really nice. We have a gentleman that is close to wrapping up. We're going to go a little bit more. Matthew, if you're hearing me, I'm sorry. I was a little indisposed here earlier this morning because of the storm. So we say the Q school is 3+. So I want to make sure you're in the Q school. I'm going to have a conversation with the person in there that, if there are things that we need to cover, we're going to take the time to cover what we need to cover. Fortunately, we're small enough, and it's our business that we can do that. Look at some of these stocks. Pinduo, Duo up big, Snap up big. TLT would have been the bonds. That's a big move. Tesla's doing pretty much better, a little better. Amazon, we picked up calls yesterday. We picked up $90 calls when it was trading at 87, 86 for December. That was almost a gift. GLD, of course, is doing great. Silver's doing great. And I want to look at the interest rate structure. Maybe I can show you this. Let me let's look here. Yeah. See, I also let me do this here. I'm going to change the view for a minute. Stay with me here. Let me just see who we have. I want to show you real time some of the things that we look at. Bear with me. And it's just a question. It's kind of, it's a little bit of a puzzle. Just kind of piece it together. Bear with me. I lost my YouTube view here, so I want to see who. There we go. Put the analytics. Okay. So we have different desktops, and so we have a desktop that's called the Pro Shop, and this desktop is where it's kind of public to our members, and occasionally on YouTube we call this the Caddy Shack. But I'm going to take you over to the Pro Shop, and so bear with me. I'm going to pause the view. I'm going to try here. I do this right? No. Okay, so I'm going to pause this view, and I'm going to bring this over here. Okay, so on YouTube, you should be seeing this, and this is a swing machine where we're actually gauging the VIX itself. So here is the VIX on a daily basis, and see, this is all we do, right? We just follow this, right? It's not, I don't want to be making subjective decisions. I don't want that. And so the VIX was risk on for me, for Susan, for all of our members, for Yosi, 11 days ago when it was at 27, right? It was even at 30, but we were getting, so it's been risk on. And the 9-day is been risk on. We had a little burp yesterday, but it's been one day. But this is the 30-day, 90-day, 6-month VIX, and this is all 10 or 11 days ago. So here is the view of the skew, and see, this is skew, and with the SPX, and here's skew at, and it's short, and this is 20 days ago, back on October 11th. And that's what had us smelling trap. The skew should have been going up, and it wasn't. When the market, now the next tell for us is when the market goes up in here and we see that skew going long, then we know we got a problem. But if it shapes up that way, you can't, I want you to get a glimpse of this, but if you're watching just one thing, you may or may not have the patience to wait for it. See, we will wait. We will wait. It may take weeks. It may take months. I'm not going to, we can't manufacture it. Here's the yield curve. Ooh, that's kind of interesting here. Okay, so, all right, so this is 90-day paper. This is 5-year paper. This is 10-year paper. This is 30-year paper. The yields have most certainly come in. And it's not 40%. It's 4 point. And I'm not dyslexic. It's just the way they report on it. It's 4.081. That's the actual interest rate. So there's still the 5 and the 10 is still inverted. And yeah, see, and we're inverted here with the 90 and the 10. I would have thought that would have come in. And that's what this is showing right now. This little graph here is what we've written, and we measure the difference between the 10 and 90-day paper, and those yields are inverted right here. So this is a problem, and we'll see how this works out. This is telling us that this economy is going to go into a recession. So the banks may or may not be doing that well. And then we can even come here. This is the sentiment view. And so we can see the VIX is still, it's not in panic. I would have thought the VIX would have been down a little bit lower, but here's the ES. We're pushing this on a daily view. And so these are some of the tools that you get to see at night. And see, we're pushing in. ES is getting close to euphoria. NQ is behind it. Russell, we're getting up in here. This is not where you would want to be initiating. Our folks are going to be in here. They're going to be holding on. They're going to get some of this. But and see the dollar has come way in. And we told everybody about this days ago. And look at the euro. There was tons of money to be made on the euro. And they were all in panic. The dollar was up here. Told everybody the dollar is going to come in. It did come in, and the other currencies bounced. So there's a huge trade here. And we said when the dollar comes in, all the metals that were in panic were going to rally. Now they're all in euphoria, right? So this isn't the place to go hog wild buying it now, but it was when it was over here. Energy is right in the middle. And then the same thing. Now the bonds got a big bounce. We said, don't be shorting bonds. And we can do this with all the markets. What else might I want to show you? Let me just look. This is just a glimpse of some of the tools that we look at and report in on at night. Now we do this with stock as well. And let me show you, this is a pretty neat tool. This is called the Pebble Beach. And these are all signals today. Let's take a look at this. Kind of mixed, actually. Interesting. We usually are like in the money on all of these. So this is a little mix. We'll have to get in there and look. This actually interprets, it's an algo that does take into account candle formation. So, and do we look at charts? We most certainly do, but we probably look at charts that have a different view to you. And this is a Renko view chart. This is kind of a mainstay, and we've been pointing this out. And we showed this, the other night, or actually every night. And this was the area that we had to hold. If we had broken 3709 today, we would have been on down. We didn't think it would, and this was the area that we had to break, and we did. 3913, and so we're right back up in here. So this is probably going to make a run. We're going to get up into realistically 3965. I'm not sure we're going to get to 4,000 before we get a pullback. And what we'll do is we'll pull back, and then it's going to have to hold this area of 3915. It's going to need to hold that 3900. I think it will, and I'm inclined to think the skew says it does. The VIX says it does, barring anything crazy. Oh, shoot. I didn't resume share. I'm sorry. I did all that and I wasn't showing you. I'm sorry, I was talking and I wasn't showing you. All right, so I'm sorry about that, YouTube. I think it's this here. I'm sorry, this is the Renko. So it was this area here on the S&P that we had to hold today, 3711. We thought that it would. We've gone up. We thought we had to take out this 3900. We're trading at 3945. I think that we could probably get up into right up in here, 3960. We're likely then to pause. Then we're likely to come back, and this area has to hold this 3915. I think it will going into the holiday. And then I think as long as we don't get anything crazy, any kind of crazy catalyst, we don't get, and anything can happen at any time, but we're likely to push. I'll be honest with you. I think we're going to push up into 4170, maybe even higher. It could really get, which is going to be wonderful. I would give my eye teeth to get back up to 4350. What a setup that would be. So this is on a Renko view. What I wanted to show you, what I was commenting on that you couldn't see because I didn't change your view. Let me come back here and show you a glimpse of what our members get to see. Here is the VIX model. So the VIX was telling us through the eyes of Swing Machine 11 days ago, the VIX was coming in, right? And so it was risk on. Red VIX is a green market. And then the skew was trending down. A red skew when the market is down is telling us we're going to get a rip your face off rally. And that was 20 days ago. So, and as we go up, now we get up into here, maybe, depending on what we see in the skew, if we get a 160 reading on the skew, 150, then we know we're going to be getting ready to go the other way. But right now, but it's the yield curve here that is a little problematic. I want to see where we finish today. I didn't think we'd have this situation. So the yields have certainly come in quite a bit here. You just move the decimal over. So the 30-year treasury yield is 4%, 10 years 3.8, 5 is 3.9, the 90-day is 4.0. They are inverted, 5 and 10. I thought that the 90-day would have come in. It hasn't, and that's what's given us this break here. This is inverting. So now the 90-day yield is inverted with the 10-year. That is a problem. It's not a problem today, but it's a problem for the banks. It's going to be a problem going forward. And it's forecasting indicating a recession dead ahead. So We'll have to watch this. I'm shocked. I'm surprised that yield didn't come in. So I would have thought it would. So this is the sort of thing. Now this doesn't, this is a huge, huge move in a day. So this is all knee jerk. These things happen. We can program our computers, and we do. VIX does this, yields do this, we do this. And that's what it is. It isn't, or I got a moving average and I think I'm going to do, that's absurd. Future sentiment, what do we see? Here's the VIX itself. We're not in a panic sell. I would have thought we would be. So that's a little divergence. We got the markets pushing into euphoria, and I would think the VIX would be down here, and it isn't. Interesting. I'm always interested in divergences. It should be, and it isn't. But we're not making a call that we're going to crash or anything like that. We're not doing that. But we could go higher. The currencies, we've been telling our Yuri and everybody, the dollar was up here. Remember, Yuri? It was in euphoria. And we said the dollar is going to come back about 110. If it gets underneath that, all these other currencies around the world that were in panic, they're going to rally. Huge amounts of money could have been made here. Short dollar, long euro, long all the other currencies. If the dollar is going to come in, then what are the metals going to do? The metals are going to rally. The metals were in here. If you remember to us, we were telling Yuri, we were telling everybody, I'm telling what I'm doing. I'm not suggesting anybody do it. Buy silver. Silver was like at $17. Every dollar move on silver is $10,000 on a futures contract. 10,000. You can see, now is not the time to buy silver gold. It isn't the time to short it either. We didn't do that, but it isn't the time to buy it. Energy is dead in the middle. And this is the sort of thing that we can do for any market. Same thing here. Bonds are rallying. Why are bonds rallying? Because interest rates are coming in. They were in panic mode. We said, don't short bonds, buy bonds, get ready. And so our comment to Yuri over and all of our members were, we expect the markets to rally because the dollar is going to come in. We expect gold to rally. We expect energy still to rally. Some could be retarded because of the slowdown. We expect the bonds to rally, and we expect the metals to rally. So, it is what it is. And we can come in here. Let's look at S&P sentiment. We can see all the stocks that are in euphoria. Look at them all. Ton of them. Absolute ton of them. Look at ton. 150 of them. And anything in panic, these two, Disney, and even that's getting a bounce. When we get everything in euphoria, then we will begin to sell calls and look for a pullback. When we're in panic, we buy. NASDAQ, stocks in euphoria. Here they are, ton of them. Now is not the place to buy these things. Should have been buying them when they were over here. And there's none of them in here now. See, yesterday, Apple was in panic. Very close to. We bought calls. Amazon was in panic. We bought calls. We bought Amazon strikes at 90 for December when Amazon was trading at 87. I think they're up like 100%. So this is a glimpse of just some of the tools that we use at night that we show our members. This tool, this is what I started to show. This is a SMC trade generator for Pebble Beach triggers. This tool can buy and sell stock based on candle formations if you're big into candles. It's a great little tool. We're not getting the best performance today. Highly unusual that we get. Most of the time, if there's like 30 signals, we're profitable in 28 of the 30. So it's a little weak today, but just giving you a glimpse of some of the things that we do. Here is the intraday. Here's the intraday view. Here's the 8-hour ES. So this is Swing Machine at a glimpse. We got the daily, the 240, but here's the hourly. 8 hours ago, $3,000, 8 hours ago, $5,000, 7 hours ago, 500. But the real tell was 7 hours ago. It was 10 a.m. yesterday. The VIX coming in, we were going to rally. And here's the Dow. And then we certainly look at traditional charts. We got traditional views, but this was the Rinko. And by the way, if you're using Rinko charts or point and figure charts or range bar charts, this tool tells us what, if you're an intraday trader, a swing trader, or an investor, what size brick should you be using? As an example, the ES contract, if you are trading it intraday, the brick size should be 4.5, $225 a brick. If you're a daily swing trader, it should be 22. If you are an investor, it should be 45. The folks that use point and figure, that use Rinko, that use range bars, the mistake they're making, they're not sizing their bricks properly. They're sizing their bricks on the amount of money they want to risk, and that doesn't work. You want to size the bricks accordingly, and this is the tool that we use. And you can even do it for stock as well. So we come down, we don't have to deal with the leverage, but if you're going to trade Starbucks and you want to trade it intraday on a Rinko, the brick size should be 11 cents. If you're a daily swing trader, it should be 54 cents. So, and we do it, on currencies and the futures, and it's really helpful. Very, very helpful. All right, so I'm going to bring everybody back over to the swing machine, and I thank you. I hope that makes sense. A little bit. There we go. We take a very empirical approach to everything, right? That's what we're doing. So if you've been following somebody, I follow those people too. I love listening to Peter Schiff. I just do. I think the guy, I love listening to him. And I Jim Rickards, and I've read all his books. Love the guy. I love all his books. I wouldn't trade off of anything those guys say, especially Jim Rickards. When the euro was at $1.45, he said it was going to $2. He had it totally wrong. He's very, very smart. Very, very good author. Peter Schiff, love the guy. I love what he talks on gold and silver and everything. But and how he trashes big. I love all that. Terrible to listen to time anything. So, but I'll still listen, because it's interesting. I'm human. So please don't ever. I hope no one listens to me and like, oh, I'm going to go buy gold here. That would be the wrong thing. I would just say so in golf, let's make a comparison to golf. DeChambeau, very mechanical. The guy's a physicist, right? That was his degree. Very mechanical, great golfer. DJ, Dustin Johnson, top golfer in the world. The guy, he ain't thinking about anything. He's just all feel, right? So I think there's somewhere in between, right? So we do, it appears that we're very, very mechanical, but once you get accustomed to it, it then fits natural. So maybe, but all the good golfers, it looks effortless, it looks natural, but they were schooled like little, Tiger Jr. there. What's a young fellow's Tiger's son's name? I forget. But they know the stance, they know the grip, they got good instruction, and so it looks effortless. I didn't want anyone to think that this little market call that we've been highlighting, and this wasn't a 50-50 property. We feel as though we had a pretty good edge on this deal. All right. It is 3:24, folks. We're going to have to sign off. And I want to say thank you for coming by. And if you want to give us a shout, you're welcome to 9 a.m. to 9 p.m. any day, weekends. And you can send an email. You want us to plug in anything in. You want to pop in. You want to call me on a given day and say, hey, Don, it's It's Tuesday at 1:30, and I want to see that swing machine right now. I want to see how it's positioned. You want to test it that way? I get it. Happy to do it. Happy to do it. And I wish you the best. I hope you had a good day. I hope it was fun. We did. And Yosi, I'm sorry, I hope I didn't say Yuri. There was another gentleman, Yuri, that was calling. I meant Yosi. Yosi, I look forward to talking with you on Monday, and we're going to sign down. Thank you.